Chapter 5. Politicians have calmed. During the Orange Revolution, I read a statement by an anonymous SBU officer. He said, if the population did not storm the administrative buildings at the peak of the confrontation, then nothing like this can happen after. This man was right. At the end of November, the demonstrators did not storm the presidential administration and the government house, and already in the first 10 days of December, their resolve dissipated. The opposition, headed by Viktor Yushchenko and Yulia Tymoshenko, gained a huge political advantage these days, and the victory of the Orange candidate in the elections was only a matter of time. This was a decisive factor in the end of the financial crisis in the country. If the politicians could not agree, then the restrictions imposed by the National Bank would have been useless. I will give a brief chronology of the normalization of the political situation. On Sunday, November 21st, the second round of the presidential elections took place. On the same evening, the preliminary results of the voting became known. According to official information from the Central Election Commission, the winner was the current Prime Minister Viktor Yanukovych. The opposition did not agree with these results and announced massive falsifications. After that, numerous statements were made by politicians. A congress was held in Severodonetsk, after which, in just 3 days, the banking system almost ceased to exist. It was saved from collapse by NBU Resolution No. 576, which came into force on November 30th. On December 1st, Viktor Yushchenko met his opponent Viktor Yanukovych and President Leonid Kuchma for the second time during the campaign. In addition to them, the Mariinsky Palace was attended by several eminent world politicians, the EU Commissioner, the Presidents of Poland and Lithuania, the OSCE Secretary General and the Speaker of the State Duma of Russia. Representatives of the authorities offered Viktor Yushchenko to hold new elections, in which, perhaps, completely different candidates from each of the political forces would take part. Viktor Yushchenko refused this option and said at the Maidan that he only demanded a second round of voting. On the same day, the head of the Donetsk Regional Council, Boris Kolesnikov, announced that the collection of signatures for holding a national referendum would soon begin. The purpose of the vote is to transform the country from a unitary to a federal republic. The preliminary date for the survey was set for January 9 by the decision of the Donetsk Regional Council. Calls for a referendum continued for several days, and then died down as the Orange demanded that the Prosecutor General's office open criminal cases against separatist politicians. On December 6, demonstrations took place under the building of the Prosecutor General's office. The protesters demanded that the governors of Kharkiv, Odessa, Donetsk and Luhansk regions, as well as Raisa Bogatyryova, a deputy from the Party of Regions, be held accountable. Some cases were even opened. On the same day, Boris Kolesnikov, it seems, called for the last time for the transformation of Ukraine into a federal state. Soon the governors of different regions began to be elected heads of regional councils one after another. They felt that they could not stay in the executive branch and decided to move to representative bodies. So, for example, did the head of the Kharkiv region Yevgeny Kishnerev and the head of the Kiev region Anatoly Zasuha. On December 1st, the Verkhovna Rada voted for the resignation of the cabinet of ministers of Viktor Yanukovych. Parliament called for the formation of a government of people's confidence. The Prime Minister and the President themselves opposed such a decision. And in order to make it impossible to implement the decision of the Verkhovna Rada, Viktor Yanukovych went on sick leave the same day. As it turned out later, he intended to remain ill until December 26. In response, the demonstrators blocked the building of the Cabinet of Ministers and said that they would lift the siege only after the government resigned. The next day, Leonid Kuchma flew to Moscow to meet with Russian President Vladimir Putin. It is not known what the conversation was about, but the head of the neighboring state openly supported his Ukrainian counterpart. He stated that the repeated holding of the second round of elections is unacceptable. Voting won't do anything. What does this mean? What will need to be carried out for the third, fourth, 25th time, until one of the parties receives the necessary result, Putin said. Naturally, by the other side, he meant the Orange opposition. Russia and Western countries, meanwhile, exchanged pleasantries. The Russian Federation called on the European Union not to interfere in the situation in Ukraine and to give our country the right to independently resolve its internal issues. Representatives of several Western states at once were surprised at such a request and called on Russia to remain neutral. They had concrete evidence of Moscow's influence on the course of the election campaign in Ukraine. For example, the arrival in Kiev of Russian political technologists Gleb Pavlovsky and Murat Gelman close to the Kremlin. Or the participation of Moscow Mayor Yuri Luskov in the Severodonetsk Congress. Naturally, U.S. Secretary of State Colin Powell denied all accusations against the states. And the OSCE and Canada decided to send even more observers to Ukraine. The Russian question was raised more than once before the end of the elections. I will give as an example one of the typical publications in the Moscow press of those times. The words belong to the scientific director of the Institute of Globalization Problems, Mikhail D. Lyagin. I admit that as a result of the economic collapse of Donbass, some Russian metallurgical enterprises will benefit temporarily. However, then unemployed Ukrainians will come to Russia, take away jobs from Russians, and metallurgists will spend at least as much on social support for the unemployed as they earn on the collapse of Ukrainian competitors. Theft of gas from pipelines may begin. Not even for profit, but simply because without gas in a crisis, people will not be able to spend the winter. If an adequate person eventually becomes the president, then he will pay for the gas. If there is no president. Several congratulations that Vladimir Putin sent to Viktor Yanukovych also became symbols of Russia's participation in the Ukrainian elections. Perhaps, in response to these telegrams, the demonstrators on the Maidan wrote an open letter to the head of the neighboring state on a 60-meter orange flag. The media of the neighboring country frankly carried out the order of the Kremlin, and it got to the point that even journalists loyal to Russia began to deny publications. For example, the Sevastopol military television company Breeze called on colleagues from Moscow not to stir up separatist sentiments in Ukraine. And after some time, the well-known journalist Sergei Dorenko arrived in the country, who made a very successful career supporting the Orange movement. He went into open opposition to the information policy of the Russian Federation. On December 3, the Supreme Court, after several days of consideration, declared the results of the second round of elections invalid and ordered the Central Election Commission to set a new date for voting. The CEC has chosen the day of December 26. The decision of the Supreme Court was the first major victory for the Orange. Before that, I had to be content with positional successes. For example, an open letter from 500 diplomats in support of Viktor Yushchenko. Naturally, the decision of the Supreme Court was immediately challenged by the delegates of the second round of the Severodonetsk Congress, which took place on the same day. However, the success of the elections for the Orange was still in question, because the old laws were in effect, and the old composition of the Central Election Commission controlled the vote. The opposition demanded to change the law on presidential elections. In particular, the amendments assumed that instead of 4% of the country's inhabitants, only 0.5% would be able to vote by absentee ballots, and with such a vote a stamp would be put in the passport. The holding of elections in the previous regime guaranteed all the same falsifications with absentee ballots. The authorities agreed to consider the proposals of the Orange, but demanded that Viktor Yushchenko's supporters simultaneously adopt amendments to the constitution that would limit the powers of the head of state. For the first time, the idea of holding a package voting was voiced by the former president following the meeting on December 1. After the decision of the Supreme Court, Leonid Danilovich said that he was ready to sign the adopted laws right in the session hall of the parliament. Subsequently, this is what happened. Our Ukraine put forward a counter-demand to dismiss the Cabinet of Ministers and the Central Election Commission, as well as to dismiss the Prosecutor General Gennady Vasilyev and the governors who called for separatism. As a concession, the opposition agreed to the prolongation of the powers of the old government, but on the condition that it would not be headed by Viktor Yanukovych. Everyone saw First Deputy Prime Minister Mykola Azarov as a compromise figure. Despite the disease, Viktor Yanukovych attended meetings of the group to agree on changes to the legislation. He tried to drastically change his image, and on December 7 he went into opposition to President Leonid Kuchma, so that he would no longer be called a candidate from the authorities. Instead of the resigned Serhiy Tijipko, the electoral headquarters, now already a nominee from the opposition, was headed by Taras Chornovil. Yanukovych's supporters continued to argue that there was no revolution. In particular, this was stated by the first president of the country, Leonid Kravchuk, in an interview with the New York Times. The growing strength of the opposition was evidenced by the fact that its demands were met. Prosecutor General Gennady Vasilyev resigned, and Sviatoslav Piskin was reinstated in his place. Deputies of local councils began to en masse express distrust of the heads of local administrations and dismiss them. Such phenomena have become especially massive in the central and western parts of the country. The current authorities obtained from Viktor Yushchenko consent to the constitutional reform. Now this can be perceived in different ways, but the tactical cunning of Leonid Kuchma manifested itself in the fact that he left the opposition leader no other choice. At that time, the line of behavior of the SBU leader Alexander Moros was rather strange. He actively supported the constitutional reform and did not leave the TV screens. The socialist even threatened to change his mind about supporting Viktor Yushchenko in the elections if our Ukraine did not vote. Later, many criticized the constitutional reform, the essence of which was reduced to curtailing the power of the president. To this day, constitutional reform is the object of constant criticism. It is impossible to change the constitution in a hurry, depending on political expediency and for political leaders. On December 8, the parliament approved the so-called Big Package, which included a set of changes to the Basic Law, the approval of the new composition of the Central Election Commission, and amendments to the election law. At the insistence of the opposition, the composition of the CEC was half changed, and Yaroslav Davidovich became the head of the commission. However, the Verkhovna Rada failed to dismiss Viktor Yanukovych and approved the Prime Minister's leave instead. First Deputy Prime Minister Mykola Azarov became acting head of government. The only parliamentary faction which did not vote for constitutional reform, the Yulia Tymoshenko bloc, BUT, believed that Viktor Yushchenko would win even without amendments to the electoral law. Obviously, the leader of our Ukraine thought otherwise. On the same evening, Viktor Yushchenko addressed the protesters on the Maidan. He announced that only one step remained before the final victory of the opposition, the vote on December 26. Until that day, he invited the demonstrators to return to work and study, asking only the inhabitants of the tent city on Kreshchetik to stay. However, for many more days people quite voluntarily gathered for rallies. December 8 should be considered a turning point in the course of the financial crisis. From that day on, the political situation began to rapidly discharge, and the economy began to recover. Before the elections, Viktor Yanukovych traveled around the country and tried to strengthen the new image of the opposition. However, these attempts looked unconvincing against the background of the resignations of the governor of the Kharkiv region, Yevgeny Kishnerev, and the head of the presidential administration, Viktor Medvedchuk. It was also important that the Russian authorities turned away from the new oppositionist. The poisoning of Viktor Yushchenko finally changed the alignment of political forces. It became known back in September. The situation could not but cause sympathy and pain in the hearts of people, regardless of political beliefs. Special mention should be made of the initiatives of the central authorities to overcome the crisis phenomena. On December 3, the Verkhovna Rada instructed the government to impose a moratorium on price increases in the country. The resolution of the parliament concerned the rise in the price of clothes, cars, and household appliances. In December, almost all car dealerships and electronics retail chains were closed for re-registration for 3 days. When they finally started working again, it turned out that the prices of goods had risen significantly. Dealers in household appliances received especially large incomes. Against the backdrop of the crisis, large networks and small shops have sharply increased the cost of televisions, music centers, and refrigerators. Parliament, of course, instructed the government to fix prices at the November level. The decision applied to enterprises of all forms of ownership, but the merchants could not be stopped by this openly communist measure. As you know, price-fixing initiatives have never worked. The State Inspectorate for Prices is more specialized in catching grandmothers selling their own chickens, but on a national scale this rudimentary body is ineffective. December 2004 confirmed this. The only benefit of the decision of the Verkhovna Rada was that it was accepted. The parliament showed the population that it is somehow trying to control the work of the economy. Such was the effect of President Leonid Kuchma's December 3 statement. The task of all branches of government in Ukraine is to prevent an economic crisis, he said, and these words were replicated by newspapers and television. The National Bank also took part in the parade of statements. We appealed to the Ministry of Economy, the Anti-Monopoly Committee, and the Consumer Rights Protection Committee with a demand to urgently take measures to prevent unreasonable price increases by business entities. Thus, the population had the impression that the National Bank had a hand in reducing prices. Although, of course, nothing could be done. Around the same time, the cabinet began to fight the budget crisis. Against the backdrop of political instability, many regions have ceased to transfer taxes to the center. At the end of November, the STA was short of 116 million hryvnias to the treasury. Daily with a plan of 200 million, this was partly due to objective reasons. For example, 27,000 enterprises did not work because their employees participated in demonstrations. In addition, the crisis hit some industries. For example, the transit of goods through the territory of Ukraine has sharply decreased. According to official data, the import of imported goods decreased by 20%, although unofficially nothing has changed. The political component was clearly visible in the behavior of the economy. Businesses deliberately withheld payments in anticipation of the collapse of the old government, the disunity of the country, or the collapse of the financial system. In total, in November the state budget received less than 1.148 billion hryvnia. As of November 30th, 5 billion remained in the single treasury account, against 13.9 billion. In September, objectively, it turned out that the government could not fully finance all the planned expenses. Moreover, it deliberately accumulated the hryvnia on its accounts with the NBU. On the one hand, this money lay dead weight and did not enter the banking system, exacerbating the liquidity crisis. On the other hand, Mykola Azarov once again showed himself to be a competent anti-crisis manager, having managed to force regions and individual enterprises to transfer taxes. By the end of the first decade of December, the budget crisis was averted. Like the political background, the general economic background has returned to normal in about 10 days since the beginning of the crisis. The judges were afraid of interfering with U.S. There were those who doubted that the measures prescribed in Decree No. 576 were the only correct ones. However, at that time, no one seemed to offer anything better. Vladimir Stelmacher's recommendation, "Let them choose themselves," and the introduction of state guarantees for all deposits, I cannot call serious proposals. The same goes for his phrase, "Give money to everyone." Therefore, the actions prescribed in the document, I consider the most adequate, but even the most correct decision could not work if the population turned against it. Decree No. 576 was in effect, first of all, because no one seriously tried to interfere with its application. Of course, already on the first day of the entry into force of the ban on early withdrawal of deposits, there were many dissatisfied. They threw thunder and lightning, threatening through the court to get the repeal of the decision. The promises came to nothing. The courts made several decisions, of course, but they all concerned the right of an individual to withdraw his deposit. On a system scale, such decisions did not matter much. By the way, most of them came into force after the lifting of the ban on early withdrawal of deposits. "I want to look into the eyes of the person who wants to cancel the decision," I said to one of my friends. The moral aspect has become the most reliable defense against the court for the National Bank. The Civil Code clearly states that the deposit can be withdrawn at any time. However, I was sure that no judge would agree to take responsibility for the survival of the financial system of an entire country. Although it was legally possible, the same moral aspect protected the NBU from the security forces. Once I got a call from the Prosecutor General's office and was asked what kind of strange decision the National Bank had adopted. I replied that I was ready to pack my things at any second, leave the office, and let them manage the financial system themselves. There were no more such calls. Another secret to the successful implementation of the resolution is the abundance of statements in our support. First of all, we enlisted the assistance of the Council of the National Bank, the highest governing body of the department, which included well-known deputies, officials, businessmen, and financiers. On the day the decision was approved, November 30th, I personally sent a whole package of documents to the experts. It included a brief description of the situation in the banking system prior to the November crisis and an explanation that all the troubles were temporary and non-systemic. The board concluded that the crisis should be treated as an emergency that requires a short-term but very strong response. It was these measures that were provided for in Decree No. 576. The actions of the board are professional, competent, and balanced. All within the basic provisions of monetary policy. There are no reasons, other than political ones, for panic in the monetary market, Anatoly Galchinsky, head of the council, told the press. He assessed the situation in the country as complicated, but manageable and under the control of the National Bank. In addition, the head of the council publicly promised that the NBU would keep the exchange rate unchanged at UAH 5.3 USD. This statement calmed a lot of minds. Later, Anatoly Galchinsky spoke in public more than once and gave encouraging comments. In addition to officials, a huge number of independent experts came out in support of Decree No. 576. The general meaning of their statements boiled down to the fact that the document was adopted in a timely manner, contained the correct norms, and the National Bank acted adequately to the situation. By the power of their authority, they managed to accustom the population to the idea that there is nothing wrong with restrictions on the withdrawal of deposits. I will cite only some of the expert statements that were made at that time. There are no reasons for a banking crisis in Ukraine. Withdrawing money from bank accounts and taking clean cash from ATMs is pointless and unprofitable. There is nothing wrong with the temporary restrictions of the National Bank, said a well-known Kharkov economist, consultant to the Verkhovna Rada Alexander Kirsch. This is one of the options for administrative influence on the market in order to remove the psychosis of the population, said Alexei Plotnikov, Doctor of Economics, head of the Department of International Monetary and Financial Relations at the Institute of World Economy and International Relations of the National Academy of Sciences of Ukraine. These measures are necessary to stabilize the cash market and the entire banking system. They are temporary. Alexander Baranivsky, Director of Economic Programs at the Razumkov Ukrainian Center for Economic and Political Research, echoed him. There will be no bankruptcies of banks. After the elections, which are changing the country for the better, we will become more attractive to investors. They will literally flee to Ukraine. I predict an investment boom. Already in February-March, investors will walk around Ukraine in droves. You can see for yourself that real estate prices are not falling. Everyone understands that after the elections we will reach a qualitatively new level, said former head of the NBU Serhiy Tijipko. Naturally, the bankers supported the National Bank. They were most interested in making Decree No. 576 work. Therefore, none of them even had to be called to mind. They all said about the same thing: restrictions are needed, they save the system, and the population has nothing to fear. Those whose deposit term has expired are guaranteed to receive their money. Kind people. If we do not stop, no one will have enough money, Alexander Durkak, chairman of the board of Aval Bank, addressed his clients. Traditionally, the statement of the Association of Ukrainian Banks was important for the population. After the adoption of Decree No. 576 and the beginning of the resolution of the political crisis, AUB published an open letter with the following content. Bankers welcome yesterday's decisions of the Verkhovna Rada, which made it possible to get out of the impasse of political confrontation in society. This will allow in the near future to stabilize the economy, financial and banking systems of the country. There can be no economic crisis in a country that is on the rise of the economic cycle. It is only necessary to wait a little for the complete resolution of the political crisis in the country. The first steps to resolve the crisis have already been taken by politicians. Until about mid-December, the press and television reported on the introduction of Decree No. 576 and commented on this document, talked about troubles in the foreign exchange market and gave people advice. On December 10, a press conference was held at the NBU dedicated to the first 10 days of the crisis. After it, for several more days, the media conveyed to the population the meaning of what was said. And from the second decade of December, the main PR campaign financed by banks began. I dare say that it was the most massive in the history of the financial sector in Ukraine. The main theses of the campaign were the following statements: the crisis is over, there is now enough money, banks have been saved and are working stably, everything will be fine, the exchange rate will remain the same, now it is profitable to carry money on deposit, before the new year the population sells foreign currency and takes promotional loans. Social and political newspapers, Komsomolskaya Pravda, Fakty, Den, Kyivsky Vedomosti, and the most popular TV channels, 1+1, Inter, ICTV, First National, STB. They covered the majority of the population. Similar work was carried out at the level of local publications. I was told that banks massively placed articles and advertisements in them, held promotions and hotlines. Employees of the territorial departments of the NBU actively participated in these processes, and on behalf of the regulator they gave soothing comments. So, for example, it was in the Donetsk and Kharkov regions. Special attention was paid to the specialized business press. Personally, NBU Deputy Chairman Alexander Schlapak and the heads of the largest banks tried to speak quite frankly and prove to journalists with specific examples that the steps taken to extinguish the crisis are necessary and inevitable. Judging by the fact that there were almost no critical materials in the business media of that period, the chosen policy turned out to be correct. There were publications like the article in Contracts of December 27. Time to collect deposits. It took the banks only 20 days to survive the political crisis. Banking institutions are moving to normal operation, lifting the restrictions imposed on customer transactions and returning runaway depositors, the newspaper wrote. Implementation of Decision No. 576. Decree No. 576 came into force from the date of signing. Such efficiency was achieved through legal cunning. The legislation assumes that the document must be registered with the Ministry of Justice if its effect concerns an unlimited circle of persons. The procedure usually lasts at least 2 weeks, and even after a positive conclusion from the department, you have to wait another 10 days. Thus, the period between the signing of the NBU resolution and its entry into force is extended by about a month. At the end of November 2004, we could not afford such a luxury. The banking system would be gone in 2 days. Therefore, at the very end of Resolution No. 576, immediately after the main text, a complete list of banks was placed. It turned out that the restrictions concerned each of the institutions, and not the entire system, and the document did not have to undergo an examination in the Ministry of Justice. The document came into force on November 30th, and the banks were saved. Then I called the Minister of Justice Alexander Lavrinovich and directly said, "The situation is critical. We have made the resolution one that does not require registration with the Ministry of Justice. If the Ministry of Justice does not play on someone's side, I will be very grateful. Let us deal with it." Thanks to Lavrinovich, he responded correctly. The Ministry of Justice supported Resolution No. 576 and did not require its registration. At the very beginning of the document, we wrote down 2 points, for the press and the public. In the first, the NBU promised that it would ensure the conduct of monetary and exchange rate policy within the limits established in the fundamentals of monetary policy. In simple terms, this meant that the exchange rate would remain stable and inflation would be kept within reasonable limits. In the second paragraph, we reassured enterprises and the population by promising that banks would fulfill their obligations in full. That is, payments by legal entities will be made regularly and on time, and the population will receive back their deposits and money from payment cards. In general, everything will be fine. After that, purely technical details were included in the text of the resolution. Points 3 through 6 dealt with refinancing and provision of stabilization loans. The 7th described restrictions on the activities of banks. The 8th served as an addition to the listed restrictions. The most important of the restrictions was spelled out in paragraph 7.7. In it, the National Bank forbade the early return of time deposits to the population and enterprises. This was the main measure to combat the crisis. Term deposits turned out to be the biggest faucet through which money flowed out of banks. At the end of November 2004, 49 billion hryvnias were on deposits, of which 27.7 billion were in the national currency. As soon as the decision came into effect, the outflow of deposits decreased 6 times. Instead of 600 million hryvnia. November 30th on December 1st, people took only 100 million. In addition, the volume of term deposits attracted by banks from enterprises immediately increased by 10 million hryvnia. In those conditions, it was the same as $10 billion. In the same paragraph, we recommended that banks return without delay deposits that have already matured, as well as interest on deposits, if the agreement allowed for periodic payment of income. In practice, the procedure usually stretched for 2 days. On the first, the bank received a notification from the client. On the second, it paid the deposit or interest. This was done in order to further reduce the outflow of money. To avoid unnecessary fuss, the NBU banned banks from reissuing hryvnia deposits into foreign currency. In the first days after the entry into force of Decree No. 576, such a service was very popular. Money from the banks, of course, did not leave, but the population could easily make a fuss about re-registration. For the same reasons, the channel for returning money through the issuance of a loan secured by a deposit was blocked. Paragraph 7.7 contained another recommendation. The NBU advised banks to pay the lost interest to those depositors who took their money in November but returned it before December 10. Banks willingly followed this recommendation and promised the same in their own name. Moreover, they offered increased interest to those clients who would bring money for a new deposit. The NBU gave banks complete freedom in carrying out such actions. As a result, in December-January, banks attracted very large volumes of short deposits, up to 3 months, at rates higher by 2 to 3% per annum. For example, instead of 17% in October, they offered 21 to 23% per annum. On the issue of returning deposits, the solidarity of the bankers was of great importance. No one, even deputies and high-ranking officials, could return their deposits ahead of schedule. Serious conflicts even arose on this occasion, but the financiers were inexorable. Moreover, the bankers said that they leave their money in the accounts. For example, the chairman of the board of Bank, Boris Timunkin, openly stated, "My deposits, 1.5 million, are in the bank. I don't take them off on purpose and don't convert them, because I understand, if I twitch, the bank staff, relatives, in general, everything will start twitching." I had the same position. Thousands of people called me, and all of them got a clear answer: I do not withdraw hryvnia or dollar deposits. This is your answer to the financial crisis. I really did not call any bank where I had money, and did not convert anything. I said to myself, either I will save the money of the country, including my own, or everything will be lost. In addition to term deposits, another UAH 35 billion were on demand deposits. It was the second largest faucet through which money could flow out of the banking system. The category of demand deposits included card accounts of the population, almost all salary or pension accounts, as well as current accounts of enterprises. Funds of the population amounted to 9 billion, enterprises, 26 billion hryvnia. Accordingly, it was legal entities that bore the greatest danger. Initially, the National Bank had an idea to prohibit companies from withdrawing money from current accounts in the event of a sharp deterioration in the situation. However, for the first time, a softer paragraph 7.8 of the resolution was prescribed specifically for demand deposits. In it, the NBU set a limit of UAH 80,000 for the withdrawal of cash by enterprises and the population from their accounts. Legal entities could receive, without restrictions, only money for such items of expenditure as payment of salaries, material assistance, social and equivalent payments. Naturally, this item did not apply to the work of foreign diplomatic missions and representative offices of international organizations, such as the UN. Both the population and enterprises received the right to withdraw no more than 1.5 thousand UAH per day at ATMs. This restriction was set by all the bankers present estimated how much money they cash out daily, and realized that the average resident of the country is unlikely to withdraw even 500 UAH in a day. Therefore, the accepted limit of 1,500 UAH turned out to be quite generous. Those who wanted more could come to the bank's cash desk and withdraw every penny from the current account. POS terminals made it possible to do this. The regulator has limited payment for goods and services with cards to UAH 80,000 per month. It must be admitted that the limit of 1,500 UAH didn't work. In early December, many banks independently introduced tighter restrictions on cash withdrawals from ATMs. Amounts in the range of 400,100 UAH were common per day, and in some ATMs it was not possible to withdraw more than 150 UAH in a day. The NBU knew about this practice, but decided not to interfere. Literally 10 days later, the banks themselves increased the withdrawal limits. Already on December 2nd, the first adjustment had to be made to paragraph 7.8. To legal entities, we added private entrepreneurs, individuals, who were accidentally forgotten when drafting the resolution. Travel allowances were added to the items under which it was allowed to withdraw money without restrictions, no more than 3 times more than the usual level, as well as funds for the purchase of milk and live cattle from the population by processing enterprises. As you might have guessed, some banks decided that the money could not be issued at all. It got to the point that employees of enterprises could not receive funds to pay salaries. Naturally, customers were shown Decree No. 576, which introduced a limit of UAH 80,000 per month, and popular anger was redirected to the regulator. Complaints accumulated in the territorial departments of the NBU and then sent to the center. On December 13, when a sufficient number of appeals had accumulated, the National Bank sent out a letter in which, with reference to the Civil Code, it stated, banks should not limit the client's right to manage funds and refuse to make payments if there are wage arrears. On December 24, when the crisis was already completely over, the NBU allowed to issue more than UAH 80,000 in cash per month. Permission for such an operation should have been given by our territorial departments after a detailed analysis of the issuance of banknotes in previous months. If it was concluded that handling large amounts of cash was normal for the client, the go-ahead was given. I did not directly control these processes, but I can assume that the issuance of permits for exceeding the limit was not massive. The banks were still struggling with liquidity, and it was not in their interest to wash money out of the cash registers. On December 10, another addition was made to paragraph 7.8 of Resolution No. 576. It concerned the work of credit unions, which, although they issued loans to the population and enterprises, kept the money in banks. When the crisis situation in the financial system began to decline, the NBU allowed them to issue loans. Considering that the assets of all credit unions then barely reached the investments of the largest bank, this relaxation could not harm the system. By Special Clause 7.6, the NBU prohibited banks from issuing certificates of deposit and their early redemption. The fact is that this type of securities is very often used in the shadow economy for cashing out and money laundering. In conditions when Decree No. 576 limited the circulation of cash, they could be replaced by certificates of deposit. Banks could have these certificates freely repay by throwing cash into circulation. Perhaps both operations would take place even within 1 hour. Therefore, the regulator decided to initially close this faucet at the same time hitting the washers. A component of the anti-crisis program was a deliberate reduction in the speed of payments. After all, for example, the manager of a territorial branch, by agreement with the client, could transfer a large amount to another institution and endanger the survival of the entire bank. Therefore, in paragraph 7.5, the NBU ordered to transfer money the next day after receiving the client's payment order. The exception was the transfer of money to the state and local budgets, to the pension fund, as well as other official payments. 2 days later, the regulator replaced the words, "funds are being transferred," with "funds can be transferred." This reservation was made in case the payment did not comply with the requirements of financial monitoring and paragraph 7.4 of the resolution. It meant that the client could transfer by bank transfer no more funds than he had in his account. The bank subsequently violated the requirements of Clause 7.5. For example, they registered customer payment orders yesterday afternoon and sent money within minutes. This situation was quite understandable. Each institution has its favorite clients, for the sake of which it is even ready to break the rules. In order to absolve themselves of responsibility, in early December, banks told their clients that the transfer of money was slowing down the NBU and there was nothing they could do. On December 9, the regulator had to publish an official statement. It said that the delay in payments occurs solely through the fault of banks, and the NBU electronic payment system works without failures. To stop this practice, we have published a list of telephone numbers of our territorial offices. According to them, enterprises could report a delay in payments. There was another aspect of the same phenomenon. By speeding up payments, banks competed with each other. I remember how the head of the board of Raiffeisenbank Ukraine, Igor Franskevich, at one of the meetings blamed the head of Privatbank Alexander Dubilat for stealing clients from him by offering same-day payments. Privatbank and other colleagues reproached. However, not only this bank was convicted of non-competitive actions, cases of unfair rivalry were also noticed in connection with the introduction of so-called credit ceilings. They were provided for in Clause 7.1 of Decree No. 576. According to the document, banks could not issue loans more than the amount fixed as of November 30. From the point of view of the NBU and other banks, such a measure was quite justified. For example, the regulator was going to issue refinancing and stabilization loans, and we really did not want the money to be withdrawn from the institution through credit schemes. Other banks were worried for the same reason. The collapse of one large institution could set off a chain reaction, pulling others along with it. Clause 7.1 was harmoniously combined with Clause 7.4, which did not allow making a payment if there was less money on the client's account than indicated in the order. Thus, the possibility of issuing a loan or providing an overdraft was blocked. It must be admitted that what was good for banks turned out to be disadvantageous for their customers. Enterprises have sharply curtailed their turnover, which was previously supported by short bank money, credit lines, overdrafts, accounting for bills. In a winning situation were those who collected hryvnia loans before the entry into force of Decree No. 576 or had enough money in their accounts. However, in general, the general slowdown in payments and the decrease in their volumes had a negative impact on the state of the economy. Exporters kept foreign currency abroad, the population was limited in money, trading companies received less revenue, they bought less from manufacturers, and so on in a circle. The limited amount of borrowing was reflected at each stage. Credit ceilings were not total. If the bank had a surplus of money, it had the right to buy government bonds, NBU certificates of deposit, or issue an interbank loan. So, on December 14, the last auction of the year for the sale of government bonds was held, at which the Ministry of Finance sold government bonds for $215 million. Of course, the banks also violated Clause 7.5. They misunderstood, confused, wrong, and did other absurdities in order to increase the limit on lending. This was done, of course, to continue the competition and poach foreign customers. For example, in order to get out of the credit ceiling, banks fixed the volume of loans issued on December 1 and not on November 30, explaining that this is the figure at the very end of the day of the 30th. Or they included off-balance sheet liabilities of clients in the ceiling amount. And very often, overdraft agreements or opening a credit line were signed retroactively, and under this pretext they continued to issue money. The regulator had to write several explanatory letters to the suddenly dumb banks in order to force them to calculate the correct amount of the ceiling. On December 6, the NBU sent out an explanation in which the methodology for calculating the limit was broken down by balance sheet accounts. After that, there could be no questions on the calculation of the ceiling. Cases have become widespread when banks poached customers by offering them loans without restrictions. The subsidiaries of Russian financial groups were especially distinguished. They offered financing directly from parent companies. In the system as a whole, the restriction of active operations had a healing effect. By early January, the total loan portfolio of banks decreased by $2.9 billion to $87.3 billion, offsetting the outflow of deposits. For comparison, a month earlier it rose by $3.7 billion and would probably have increased by the same amount, had it not been for the crisis. In December, the main reduction affected loans in hryvnia. Their volume decreased by $2.4 billion to $50.4 billion. The volume of loans in foreign currency fell slightly, by $500 million, to $36.9 billion. In those conditions, banks tried not to issue large loans, but not to limit small ones. Institutions received money, enterprises and private entrepreneurs repaid previously taken loans. Their total debt in December decreased by $3.8 billion. Having received free money, banks were able not only to patch up the holes in the balance sheet created by the outflow of deposits in November, but also to increase the issuance of more expensive loans to the population. Before the new year, a lot of ads appeared that offered to buy household appliances in installments. Consumer lending, the most profitable for banks, was gaining momentum. In general, for the year, the increase in the issuance of loans to the population amounted to 64.5%. For comparison, legal entities increased their portfolio by only 25.4%. A significant part of Decree No. 576 was devoted to the cash currency market. The limiter for exchange rate fluctuations in the cash market continued to operate, 2% in both directions from the official NBU rate. At the same time, in paragraph 7.2 of the resolution, the regulator set a limit on the sale of dollars in one hand in the amount of $1,000. We borrowed this measure from the times of the October-November currency rush. Then individual banks voluntarily set limits on the sale of cash currency, for example, in the amount of $100 per person. Such a measure was due to the fact that again revived the hype in the cash market. In the first days of December, the population was in despair and bought dollars at any price. In Odessa and Kharkov, the price of the currency reached 8 hryvnias, and in Mariupol, according to rumors, it was 11 hryvnias dollars. As in October, banks resold currency to money changers, and especially close clients converted their hryvnia reserves into dollars. In both cases, 10 transactions were made in 5 minutes for $1,000 per one and the same passport. At the beginning of the working day, dollars instantly left the bank and either settled in cells or were sold at black market prices. On the part of a large bank, the head of a local branch or branch was usually involved in the scheme. Sometimes the management of small banks, up to the head of the board, was involved in abuses. In one of the clarifications to Resolution Number 576, the regulator ordered banks to monitor transactions every week when a client buys currency too often and too much. If institutions noticed several such consecutive transactions, they were obliged to transfer data to the State Financial Monitoring Service. The NBU called for a more thorough analysis of cases of purchases of more than $1,000 in cash or more than $50,000 in non-cash transactions. Even if the bank did not reveal suspicious details about the client during the check, information about him should have been included in the GOSFIN monitoring database. In the context of the revival of the hype, the NBU again resorted to the carrot and stick method. The whip was the threat of punishment. Throughout December, mobile groups of controllers continued to travel around Ukraine, looking for violations by banks. Based on the results of inspections, exchange offices were closed, and sanctions were applied to banks. In a letter dated December 10, the regulator hinted that certain financial institutions are trying to create an artificial shortage of foreign currency and deliberately provoke protests from citizens, the revival of the black market of currency, which will ultimately undermine confidence in the domestic banking system. The NBU demanded from banks to better organize the sale of currency through exchange offices and cash desks, and its territorial departments to tightly control these processes. There was an episode in my interview with Business Magazine on December 1 that accurately reflected the processes that were taking place. Do you know what is the problem of the Ukrainian banking community? Half of it is decent people, and the other half is divided into dishonorable and very dishonorable. There was a case when we revealed 19 facts of the sale of foreign currency using passports destroyed a year and a half ago. They sold $3.4 million. I'm talking about one bank, I told the journalist. Are you offended by this bank? He asked. Offended? Yes, it's just a crime. I exclaimed. Criminal cases initiated, the interlocutor asked. We handed over the materials to the prosecutor's office, we'll see. I think they'll wake up. I gave another example to the Kyievsky Vedomosti newspaper. One of the top 10 banks bought $4.5 million and sold $2.5 million and $2 million for 2 passports in 2 transactions. We catch the banks by the hands and reveal, the average transaction with the dollar is $5,000 to $10,000. What will you do to him? I do not believe that the population buys an average of $9,000. Yes, with different passports, but in terms of the volume of exchange transactions, Ukraine today is several times higher than any European state. The carrot for banks was the large cash interventions that took place on November 29, December 2, 7 and 10. We sold $236 million on them. All currency emissions were quite significant. As early as November 29, we had to increase the maximum volume of banknotes sold from 10% to 30% of the daily limit for transactions with the NBU, or from $50 to $150 million. In the remaining days of December, the NBU sold another $232 million. These were already rather modest interventions, a maximum of 10% of the limit on operations with the NBU or $50 million. The banks themselves were also involved in the delivery of currency. On average, they bought $30 million a day on their own to resell on the cash market. In order to minimize abuses with the distribution of currency, the NBU in early December ordered banks to sell cash dollars bought from the regulator and on the interbank market only through their own cash desks and exchange offices. In response to this, agency kiosks, which are the majority in Ukraine, removed quotes for the sale of dollars from their plates. At best, they only bought the currency. At worst, they didn't even do that. One can imagine the conclusion the population made: there are no dollars. The reaction of the NBU was instantaneous. On December 2, we sent out a letter in which we informed that no one released agency exchange offices from the obligation to sell the currency that they bought on the same day. The fact that dollars from the NBU and banks did not reach them was not considered an excuse. Agents reluctantly posted quotes for sale, although it was still unrealistic to buy dollars from them. On December 7, the NBU secured the right to tell banks which regions to send more cash dollars to, and which regions to send less. To do this, from December 8, institutions had to send the regulator a scheme for distributing currency between their divisions before each cash intervention. We made it mandatory for banks to list all branches and branches, even those to which the institutions were not going to allocate dollars. With this information in hand, we could rearrange the numbers. The consent of the banks was not required. The fulfillment of the requirements of the NBU was a condition for the sale of cash dollars to them. The regulator required that the currency initially fall into all regions in which the institution operates. Already in the first days of the Decree No. 576, it became known about a new trick of the banks. They set commissions from 1% to 5% for the sale of cash dollars. Yatsenyuk, Privatbank, Pravexbank and Aval charged an additional 3 to 5% of the amount sold, Nadra, 1 to 3% depending on the branch. Having learned about such violations, on December the 9th and 10th, the NBU sent out 2 letters in which it forbade the collection of additional fees. The regulator has established that commissions are taken only when buying and selling travelers' checks, converting one currency into another, accepting foreign banknotes and personal checks for collection. The NBU emphasized that this list is exhaustive. The regulator threatened that he would punish violators. Speaking to journalists on December 10, I specified that the NBU could excommunicate them from the trading session. I remember how I personally spoke on this subject with the heads of several systemic banks. The conversation took place in raised tones, because they tried to defend their innocence. For example, Boris Timunkin, chairman of the board of Yatsenyuk Bank, explained that the commission would help fight excessive demand. Allegedly, the population will see that due to the additional fee, the real value of the currency will be higher and refuse to buy. In fact, of course, it only made people nervous. On December 16, Decree No. 552 came into force, which combined the regulator's experience in combating exchange offices that violated the rules of currency trading. The document fixed the procedure for applying sanctions to kiosks, for example, for the lack of a cash register or registration with the territorial office of the NBU. In addition, the regulator obliged banks to check the exchange office for compliance with the law if its average monthly turnover did not exceed UAH 100,000 in the last quarter. Banks whose kiosks were caught in violation were banned from the trading session for an average of a week. By the same resolution, the NBU allowed clients to carry out the reverse operation, reversal, within 15 minutes after the transaction. The emergence of such a requirement was due to the fact that citizens were misled by exchange rates. For example, the price of 5.036 UAH USD. People often took for 5.36. People discovered their mistake only at the moment when they already received the hryvnia. Before Decree No. 552 came into force, kiosks refused to buy the currency back. As in October, I personally checked the exchange offices. He still got into the car, drove around Kiev and changed $100 in several of them. Except this time I didn't change into a tracksuit anymore, I skated in a tie. However, they still didn't recognize me anywhere. Resolution No. 576 obliged Vadim Pushkarev, director of the General Department of Banking Supervision, to discuss with the Ministry of Economy and Tax authorities how best to monitor compliance by enterprises with a 90-day deadline for returning foreign exchange earnings to the country. It is no secret that with the onset of the crisis, many exporters took advantage of the legal right to delay the receipt of money for 3 months and withheld funds offshore until the situation was resolved. Businesses were also very concerned about having to sell 50% of their income. In practice, taking into account numerous benefits, about 25% of exporters' income was subject to sale, and yet the hryvnia was less reliable than dollars in the eyes of enterprises. In addition, importers used the opportunity to make an advance payment for up to 90 days, buy foreign currency and export it abroad. In general, because of this, the balance of supply and demand in the domestic foreign exchange market was disturbed. The NBU was forced to cover the sudden increase in demand for dollars at the expense of reserves. By Clause 7.9 of Resolution No. 576, the regulator urged banks to buy foreign currency only under foreign economic contracts, under which the delivery of goods has already taken place. Or use a letter of credit, the most reliable form of payment, which provides for a guaranteed delivery against payment. The NBU had no right to prohibit prepayment, but we did our best to get rid of it. The lack of delivery of goods after transferring money abroad is a typical sign of a capital withdrawal scheme. At the same time, the danger of devaluation continued to exist due to a sharp decrease in gold and foreign exchange reserves. They were exhausted before our eyes. Only from November 29 to December 3, the regulator was forced to sell $283 million. Before the critical level of $6 billion, after which a devaluation would follow, there was a little more than $1 billion, and we tried our best to prevent a tragic denouement. Therefore, we decided to put obstacles in the way of the outflow of non-cash currency from the country. To do this, first of all, by paragraph 7.2 of Resolution number 576, the NBU ordered to provide enhanced financial monitoring of the purchase of non-cash currency in the amount of more than $50,000. In simple words, we obliged banks to control whether these applications are an attempt to launder or withdraw capital abroad. In parallel, the board seriously discussed the possibility of introducing a 100% sale of foreign exchange earnings by exporters. We were dissuaded from this idea by the head of the Council of the National Bank, Anatoly Galchinsky. He quite logically assumed that enterprises would generally stop bringing currency into the country. He also had the honor to declare in public that there was no need for a 100% sale. By that time, the news about the proposal of the NBU board had already leaked to the press and scared the exporters. Relying on the integrity of banks in such a difficult environment was difficult. The criteria by which the transactions were checked by financial monitoring assumed the search for outright crime, while the withdrawal of currency abroad has always been a delicate affair based on legal schemes. The regulator saw that the demand for the currency quadrupled for no apparent reason. It was clearly not an economic process. Therefore, the NBU board decided, nothing can be done until we can see the contracts under which dollars are transferred. On December 1, I stated in an interview with Business Magazine, if monetary management continues in the old regime, capital outflows will continue. First of all, through small banks. They act dishonestly. Now we are introducing severe restrictions and will kick these banks out of the foreign exchange market in a manual mode. Previously, we tried to dress our actions in a beautiful legal form, but when you are hit in the face, standing with a white handkerchief and saying, "I'm sorry," is not entirely logical. Today is a revolutionary time. And adequate drastic measures are needed. A special reporting form was urgently developed. On the first day of December, the regulator sent a letter to banks informing them that it was going to independently check all applications for the purchase of more than $100,000 in US currency or euro. Since the control took a very long time, since December 8, the NBU has sharply reduced the time of the currency session, shifting it from 12.30 to 16.30 to 14.30 to 17.00. On December 2, the regulator clarified that information should also be submitted for technical loans. The NBU has ruled that if a client buys more than $100,000 to repay a technical loan, the bank is obliged to inform the regulator about this operation. In practice, before 11 o'clock every day, we collected questionnaires for each such transaction that would take place the next day, and manually approved or rejected an application for the purchase of non-cash currency. For clarification, we used the existing developments of our department, which we called financial intelligence. For example, we checked who, where and when the acquiring firm was registered. If 4 or 5 companies hung on one individual, there was no need to prove anything else. It turned out that in those days the whole country was buying bananas, citrus fruits, printer paper and oil products on a huge scale. Moreover, even one-day firms, which had never entered foreign markets before, wanted to buy currency for these operations. They submitted the same applications and did not even suspect how comical a country looks when it buys office paper in the days of the crisis. Such volumes were declared that it was possible to feed bananas and fill all Ukraine with gasoline. We sent out a black list of enterprises to the banks and warned them, if you serve an enterprise from this list at least once, we will prohibit the sale of foreign currency at all. An interesting phenomenon is that now all banks are knocking at each other, but no one is selling dollars to dirty firms. Everyone is afraid. You know, it is very difficult to be an ideal legal body in a country where the mechanisms of normal legal relations do not work. Banks have now realized that they are all hostages of the situation. Don't get out one by one. If you get out, then exclusively to everyone and at once, I said in an interview with Business Magazine on December 1. It was not difficult for the National Bank to see the fake applications and refuse to satisfy them. And even if there were no claims against the company, the regulator simply halved the requested amount. This was done involuntarily, in order to preserve reserves. For the same reason, we often refused banks that wanted to buy foreign currency on their balance sheets. Our correctness was proved by the fact that the NBU ban has never been challenged, not only in court, but even by phone. As expected, instead of an open confrontation, banks began to form requests for $99.9 thousand, as well as to make dubious purchases in Russian rubles. Therefore, from December 8, the NBU reduced the minimum amount of audited transactions from $100,000 to $50,000, and also began to check applications in rubles. Moreover, if one client made several small requests, they should have been summed up. The regulator made a very detailed reporting form for each of the major applications and began to receive more information for its analysis. And so that banks, under the guise of buying foreign currency to pay off customer deposits, do not commit violations, the NBU forced to provide the supervisory authorities with a payment calendar with the expiration dates of each deposit agreement by December 8. Even with a limit of $100,000, the National Bank controlled 70 to 80% of the total amount of purchased currency. After lowering the threshold and additional control of transactions in rubles, the degree of coverage exceeded 90%. The effect was not long in coming. On the move, the NBU cut off about 30% of unwanted buyers. Already in the second week of December, the regulator sold $194 million, and in the third, $198 million. In total, from November 29 to December 10, the NBU sold $236 million in cash. These were significant amounts, although much smaller than in the period from October to November 26, when cash interventions reached $900 million. For example, on October 25, banks bought $136.85 million, and on October 27 another $130.16 million. Thus, supply and demand in the non-cash currency market have almost balanced. Every day the regulator sold 30 to 40 million non-cash dollars, but hoped for a quick normalization of the situation. I even voiced a forecast that by the end of the year the NBU's reserves would decrease by a maximum of $700 million due to cash and non-cash interventions. The prediction turned out to be wrong. Inventories decreased by only 100 million tons. The situation was saved by privatization competitions and increased revenues, presumably, to finance the election campaigns of both political forces. The money came in the form of short-term foreign debt from Cyprus, the US and the Baltic states. In addition, the regulator itself constantly reassured exporters, gradually revaluing the hryvnia against the dollar. From December 9 until the end of the year, after holding the 5.3062 mark for 3 weeks, the rate strengthened to UAH 5.3054 USD. This was to tell all the doubters that the national currency is still stable. The miracle happened on December 20. Thanks to its efforts, the NBU bought the currency on the interbank market for the first time since the beginning of November. Until the end of the year, the regulator purchased dollars 5 more times, although this result was achieved due to the continued practice of cutting applications for the purchase of foreign currency. A huge scandal arose around insurance companies. Viktor Suslov, the head of the State Commission for the Regulation of Financial Services Markets, has addressed me more than once. He asked to allow subsidiary companies to transfer foreign currency abroad as part of reinsurance operations. I remember I even asked Viktor Ivanovich, what are the total assets of insurance companies? He told me some small figure, and I replied that it was 1/10 of the assets of the smallest bank in the country. Therefore, even if the entire insurance market were to fall, it would have much smaller consequences compared to the collapse of one small bank. I assured Suslov that the Financial Services Commission would comply with the instructions of the NBU. However, the insurers did not give up. They said that Ukrainian planes would soon stop flying abroad, because they would not be able to cover their risks. A very interesting episode occurred during a meeting of the Ukrainian Union of Industrialists and Entrepreneurs, organized by its head Anatoly Kinak. It was just before Volodymyr Stelmacher's return to the post of head of the National Bank. At first, some participants stigmatized the NBU, which limited the issuance of loans to industry. And then, in the presence of the press, the head of the Lemma Insurance Company began to subtract the National Bank, which allegedly ruined a promising and honest sector of the economy, preventing it from developing. I did not expect such impudence, and as soon as he finished his report, he told how, with the onset of the crisis, insurance companies had more than halved their reserves. They rushed to reinsure themselves abroad, which, in fact, meant a banal withdrawal of capital. For this, foreign currency was bought on the interbank market. There was nothing to hide these facts for the offended. On December 13, the NBU sent out an explanation to banks regarding the purchase of foreign currency by insurance companies and its transfer abroad. The board decided to act far-sighted and shift the responsibility for the withdrawal of capital to the Financial Services Commission. In order to purchase foreign currency, companies had to receive a conclusion from the Commission on the compliance of reinsurance agreements with the requirements of Ukrainian legislation. To do this, they had to submit a large package of documents to the Financial Services Commission, including calculations of the share of reinsurance payments in reserves. De facto, this meant that the Commission received enough information to judge the legitimacy of the transaction. This means that the responsibility for the possible withdrawal of capital from the country fell on this state body. The explanation instantly sobered up the insurers and the Financial Services Commission. Our efforts were not in vain. Preventing the outflow of deposits and the withdrawal of currency abroad helped to stop the exhaustion of banks. However, many of them were so badly hit by the events of late November that they needed an emergency liquidity boost. If in some institution the payments of enterprises and the issuance of money to the population were stopped for 2 or 3 days, it would almost certainly not be possible to save it. To hide the problems, the banks embellished their balance sheets as best they could and even competed. For example, according to rumors, Private Bank transferred UAH 100 to 300 to the salary cards of its clients in advance and asked not to use the money. According to the reports, this took place both as an increase in the loan portfolio and as an increase in the deposit base. Such a trick with reporting was supposed to show customers that the bank is working successfully even in times of crisis. There were other rumors as well. True or not, but despite the painting, the situation for all banks was equally difficult, and something had to be done about it. To maintain liquidity, the NBU lowered reserve requirements, applied massive bank refinancing, and introduced stabilization loans to those who suffered the most. I have already mentioned that even before Decree No. 576 came into force, the NBU made several decisions that were supposed to help banks maintain the required level of solvency. For starters, we've reduced the redundancy requirements. From November 29, the NBU allowed banks to count 40% of the hryvnia in cash registers in the calculation of required reserves. From December 1, correspondent accounts were allowed to keep daily not 70%, but 60% of the required reserves. And Decree No. 565 of November 24 provided for a reduction in the reservation standards themselves. For all term deposits, they were reduced from 7% to 6%, for all demand deposits, from 8% to 7% of the funds raised. Back in mid-November, it was assumed that the new standards would come into force on December 25. However, the situation was so unpredictable that paragraph 7.3 the regulator has accelerated the introduction of the document. The new rules will come into effect on November 30. Thanks to these measures, in December the amount of required reserves in the system decreased to UAH 5.9 billion. From 7.1 billion in November. After adjusting for cash balances, this amount was further reduced to 4.7 billion. And yet, many banks could not even meet these requirements. The NBU treated this phenomenon with understanding. The board has clearly decided for itself that until the end of the crisis, sanctions will not be applied to any of the institutions if the violations were caused by objective reasons. However, on all corners we shouted that we would punish, and it worked. In addition to lowering reserve requirements, back in November the NBU began facilitating banks' access to refinancing. With the onset of the crisis, in a letter dated November 26, it was allowed to apply to the NBU not only to these banks, but to all those who experienced difficulties with liquidity. Moreover, institutions could receive it at least every day. The scale of the provided refinancing can be judged by such figures. In January-September 2004, through various instruments, overnight, tenders, medium-term and long-term loans, direct repo, the National Bank issued UAH 1.2 billion. Over the remaining 3 months, refinancing turnover amounted to UAH 19.3 billion, including almost a billion hryvnias of stabilization loans. Of this amount, Banks received UAH 13.3 billion from the NBU in December, at an average interest rate of 13.7% to 19.7% per annum. In addition to this, the NBU early returned another UAH 300 million, which remained on its accounts as a result of the sale of certificates of deposit in previous months. The regulator did not have the task of dragging the entire banking system on itself until the end of the crisis. Therefore, on November 30, on the day Resolution number 576 came into force, the NBU increased the cost of blank refinancing from 15% to 20% per annum. This price lasted all of December. It was supposed to encourage banks to look for alternative sources of financing. The rule worked: the more expensive the money, the smaller the amount of loans provided. Since December 8, the cost of refinancing secured by government securities has increased from 12% to 14% per annum. The reason for the rise in prices was not only the desire to wean banks off cheap money from the regulator. For almost the entire year of 2004, the NBU deliberately took losses, offering bank certificates of deposit with high yields. However, the Ministry of Finance was of little interest. He ordered the National Bank to transfer 500 million hryvnias to the state budget, and we had to earn them. In order to encourage banks to look for other sources of money, on December 4, the National Bank adopted Resolution number 591. From December 6, the regulator demanded that an amount not less than the received blank refinancing be kept on a correspondent account. We could not rely on banks and used the possibilities of our own operational management. The minimum set by the regulator was tightly controlled by the computer, and banks could not physically withdraw refinancing received from the NBU from their correspondent account. In fact, this meant that the regulator's money could only be used to meet reserve requirements. We did not risk losing our resources in any way. Deposits of the population or legal entities, as well as assistance from related companies, could become alternative sources of money. Large financial industrial groups during the crisis, in order to support their banks, increased current account balances or even brought in foreign currency from offshore accounts to put it on term deposits. Received support from parent structures and daughters of foreign banks. For example, Raiffeisenbank Ukraine was assisted by a parent institution located in Austria. However, not all banks could use outside help. For various reasons, the owners either did not want or could not provide them with resources. There were no returns. Some banks were not always able to repay each other previously taken loans, and some even found it difficult to return the refinancing to the regulator. There was no money market as such. Operations on the interbank market, which took place according to the NBU reports, for the most part were the usual prolongation of previously issued loans. In order not to start scandals, banks reissued debt every day. In such conditions, even before the issuance of stabilization loans, the NBU decided to quietly roll over overnight loans. To do this, on November 30, Resolution number 577 was adopted, which excluded a short proposal from the regulation on the regulation of banks' liquidity, on the inadmissibility of prolonging refinancing. The banks were supposed to return the money immediately after receiving a stabilization loan, a conditionally permanent asset. A classic example of a recipient of a stabilization loan was Bank Aval, the second largest in Ukraine. It was in it that many large businessmen and politicians kept their deposits. At the end of November, they began to withdraw deposits, which often exceeded $100,000. The rest of the population followed them to the bank branches to take small deposits. Their fears were strengthened by information leaked to the press about the imminent transfer of customs accounts from Aval to the state treasury. As a result, the financial giant would lose hundreds of millions of hryvnias in a matter of days, which would inevitably lead to its downfall. It is difficult to predict how many banks Aval would pull along with it. The domino effect of the bankruptcy of a systemic bank is difficult to assess. Only one thing is clear: it would be a catastrophe, during which dozens of institutions would perish. Aval became the first, apart from MRIA in October, to receive a stabilization loan. On December 2, the board decided to provide the bank with UAH 700 million. We agreed that the bank would be able to receive the money as the collateral was issued. A separate NBU resolution had to be signed for each tranche. Before receiving coverage, the regulator provided the bank with a blank refinancing. By December 7, Aval made sufficient security, and the board of the NBU approved a resolution to provide him with 500 million hryvnia. The repayment of the stabilization loan was to take place no later than June 1, 2005. This money helped AVL relieve tension in the system as a whole, as it began to pay off its obligations in a timely manner. The bank returned the money by February 10, 2005. 10 banks received stabilization loans in the amount of UAH 998.4 million. This amount could have turned out to be higher, but some banks managed to normalize their liquidity before receiving money from the NBU, while others were satisfied only with the fact that they could use such support at any time. In total, the regulator approved decisions to provide stabilization loans to 18 banks for a total of UAH 1.8 billion. For the first time, banks learned about the possibility of obtaining a stabilization loan on November 25 from a letter from the NBU. Institutions that experienced a significant decrease in liquidity could apply to the regulator for refinancing and, if necessary, for a stabilization loan. The next day, in a new letter, the NBU clarified that banks would have to submit a package of documents along with a request for the allocation of money, from which the reasons for the withdrawal of money would be clear. For example, a decrease in liquidity could provoke an outflow of household deposits or, on the contrary, an institution's excessive dependence on the interbank market. In the first case, one could speak of force majeure; in the second, of the low qualification of management. Accordingly, the actions of the regulator in these two cases would be different. In Decree No. 576 of November 30, a seemingly small paragraph 3 was devoted to stabilization loans. Initially, the NBU believed that the norms prescribed in the third section of the regulation on regulating the liquidity of banks through refinancing, deposit and other operations would be quite sufficient for their provision. This document came into force at the beginning of 2004, and it was believed that it described in sufficient detail the procedure for granting a stabilization loan. Therefore, initially, in Decree No. 576, the regulator only added that money can be allocated against the security of banks' real estate and property rights under loan agreements in which real estate acts as collateral. The NBU proposed to issue security through the mechanism of assignment of rights of claim, with the participation of the bank, its borrower, and the regulator. In practice, it turned out that the norms prescribed in the regulation were of little use. They were not detailed enough and raised many questions. In particular, it was assumed that banks would provide financial recovery programs to the regulator, but there was no common understanding of how these documents should be drawn up. In addition, not all banks could provide real estate for the required amount as collateral. Therefore, in the first days of December, the NBU developed a number of new resolutions and letters, in which, literally on the go, it improved the rules for issuing stabilization loans. Changes to Decree No. 576 were made only once, on December 10. They stated that stabilization loans could be provided for up to 1 year at an interest rate of at least 15% per annum in an amount not exceeding 50% of the bank's regulatory capital and 50% of the security provided to them. Also, the NBU has significantly expanded the list of assets, on the security of which money could be issued. To real estate, we added guarantees from other banks, state and municipal bonds, shares and bonds of enterprises that were freely circulating on the market. If the bank did not have enough of these types of assets, the regulator was ready to consider other types of collateral. Naturally, the expansion of the list of types of collateral required the development of a huge number of additional procedures. On December 2, the NBU distributed a letter in which it listed the documents required to obtain a stabilization loan. This huge list included a financial recovery program, a payment calendar, and detailed data on each collateral. I read in the press that it took about 300 documents to get a stabilization loan. It looked like the truth. Information from 3 to 7 days was carefully studied in the Territorial Department of the NBU, then it was divided into 3 parts and considered by the Department of Monetary Policy, the General Department of Supervision and lawyers of the National Bank. Our Risk Control Department necessarily endorsed the application. For each of the collateral, NBU specialists monitored the entire list of documents and always contacted the original borrower. For example, for a bill of exchange, the regulator required consent to the assignment of the right to claim from each of the signatories of the endorsement. Sometimes there were more than a dozen subjects in the chain, and each was required to obtain consent. A working commission was created in the Territorial Department of the NBU for Kiev and the region, which was joined by a project management group. Prior to that, she was involved in intermediation of SME lending and long-term refinancing under an agreement with the EBRD. She also had strong knowledge of collateral adequacy assessment and all lending procedures. After studying by these structures, the documents were submitted for many hours of consideration by the NBU board. Usually, the heads and owners of banks were invited for discussion. There was a lot of work, and it was possible to consider a maximum of 2 applications per day. That is why, by mid-December, only 7 banks managed to receive money, although about 35 applied for help. There were several other reasons for the slow processing of loans. First, of the 35 banks, the majority submitted completely unprepared packages of documents. It even turned out that the board of the National Bank itself ruled these papers so that we would not be accused of unwillingness to give money. It was noted that small and regional banks, which did not have influential patrons in the central government, approached the preparation of the necessary documents most carefully. And vice versa, those who had a roof behaved very arrogantly. They often came to the NBU with confidence that they would receive the money anyway. I had to rap such petitioners, and the most unceremonious, even several times. Secondly, there were many banks with a stable financial position that wanted to get easy money. Usually they were cut off at the early stages of document verification. No one exerted direct pressure on the NBU, although well-known people personally called me and my colleagues with a request to expedite the consideration of documents. It was important for us not just to give out money, wait for the bank to collapse, and then start selling collateral. The NBU set many restrictions on the activities of institutions that wanted to receive funding. As early as December 1st, the regulator sent out a letter in which it listed the main conditions that any institution had to fulfill in order to receive a stabilization loan. In particular, it was not supposed to conduct insider transactions, investments, redeem its own shares and early redeem bonds, accept anything other than money as repayment of loans issued, issue unsecured loans. The regulator had to return the money every 6 months in equal installments every month. A specific list of restrictions was listed in a separate resolution labeled Bank Secrecy, which took into account the characteristics of each bank and could include many other conditions. We have done everything so that obtaining a stabilization loan does not become a joyful event in the life of the institution. The restrictions were supposed to encourage the managers and owners of the bank to return the money to the NBU as soon as possible. On December 7th, when the first applications for stabilization loans were already being considered, the NBU board sent out a new letter with instructions. In it, the Department of Monetary Policy and the General Department of Banking Supervision summarized the experience of several days and prescribed in detail the procedure for considering applications for issuing stabilization loans, accepting collateral, and observing the conditions for providing money to the bank. The same document contained detailed instructions in case the institution violated its obligations. For example, the balance of money on the bank's correspondent account was monitored daily and the condition of the collateral was monitored once a month. If the condition of the institution did not improve within 2 or 3 months, severe restrictions on active operations could be applied to it. In the annex to this letter, the NBU provided a detailed list of all the documentation that banks had to submit to the regulator. Thus, from December 7th, the institutions had at their disposal detailed instructions on the procedure for obtaining loans. On December 15th, we sent out another letter about the rules for compiling the bank's payment calendar. The regulator offered institutions to create tables that indicated the terms and volumes of deposits attracted by the bank and loans repaid to it. The tables helped to understand at what point gaps in the financing of active investments could arise. Unfortunately, the regulator was never able to force absolutely all banks to draw up such forms. Institutions began to resent the interference in their commercial activities. A very useful development was used only by banks that wanted to get a loan. Even at the stage of discussion with the bank, the NBU invited the owners of institutions to participate in the negotiations. We set them an unspoken condition, which we learned from the practice of European banks. The regulator agreed to issue a stabilization loan if the owners replenished the capital and liabilities of the bank with approximately the same amount of money. Fortunately, most of them were adequate people and accepted our conditions. So many banks applied for stabilization loans not because they needed money. They wanted to get a loan agreement and a resolution of the National Bank as a guarantee for all their partners that it was supported by the central bank. It was a guarantee for both depositors and other banks that the NBU would provide money if necessary. The stabilization loan became an analog of the Lloyd's insurance policy. However, in fact, the money of the National Bank could not cover the debts. Approximately 70% of banks received money on the so-called block account, which was used only for reservations. That is, banks still had to repay loans, repay deposits, and close holes in their balance sheets on their own. From the second half of December, the need for stabilization loans began to gradually disappear. Banks increased the profitability of deposits, and the population calmed down. Gradually, people began to deposit as much as to withdraw, and from the second half of the month they carried money to banks in full force. As of January 1, 2005 on deposits, individuals were 41.7 billion hryvnia, against 40.9 billion December 24, 2004. Legal entities also increased the balances on their accounts. By January 1, they kept UAH 41.5 billion on deposits, against 39.8 billion on December 17. At the same time, both the population and enterprises increased their hryvnia deposits at a faster pace. This reduced the need for banks to obtain stabilization loans. Since January, things have gone so well for them that in the first quarter, most institutions returned the money to the NBU ahead of schedule. End of the crisis. Withdrawal from the National Bank. The gloomy predictions of a whole army of experts have not come true. Not a single bank went bankrupt during the crisis. Decree No. 576 and the measures of the NBU that accompanied it proved to be the most effective in the current situation. Already in the second half of December, the banking system began to stabilize. The volume of funds on correspondent accounts of banks increased by UAH 1.8 billion, the monetary base grew by 7.1%, and the money supply by 0.4%. On December 20, for the first time since the beginning of November, the regulator bought the currency on the interbank market. In early 2005, when my friend, Deputy Chairman Alexander Schlapak, and I had already left the NBU, Vladimir Stelmak, Chairman of the Board of the Department, said that the actions of the regulator in those circumstances were completely wrong. He considered it necessary to refinance banks in any quantities so that they could issue an unlimited number of deposits to everyone and thus extinguish the hype. This point of view was a revelation for me. As I wrote above, on a November night, when Decree No. 576 was being discussed, Vladimir Semenovich said on the phone, "They got themselves into trouble, let them get out themselves." Of the constructive proposals, he voiced only one thesis: don't do this. Obviously, the idea to issue refinancing to fight the crisis came to him later. Let's try to simulate the development of events according to the scenario proposed by Vladimir Stelmak. The withdrawal of deposits at the end of November unfolded like an avalanche. At first, the outflow of money from the system was 70 to 80 million hryvnias per day, later, 150 million, and at the very end of November reached volumes of 500 to 600 million. It could have been more, but banks, under various pretexts, slowed down the issuance of deposits. In the future, the outflow would continue to grow. Suppose that throughout the country the population would take 1 billion hryvnias a day. This amount is quite real, given that the balances on the deposits of citizens at that time amounted to 42.9 billion hryvnias, of which 23.3 billion were in the national currency. Under such conditions, the balances on correspondent accounts of banks amounted to UAH 6.5 billion. Would be finished in 6 days. And this is provided that the payments of enterprises, currency transactions, and all other payments would be suspended. Banks would become cash desks for issuing money and could only rely on NBU refinancing. What are the chances that even in 10 days the outflow of deposits would stop? I take the liberty of suggesting that none. First, the outflow of deposits was generated not by financiers, but by politicians. Talk about the division of the country, calls to take money from the banks of the oligarchs, and statements about an imminent crisis in the banking system did not stop until the second decade of December. By that time, the outflow of deposits, according to the most conservative estimates, would have amounted to 10 billion hryvnia. Secondly, the withdrawal of deposits unfolded according to the snowball model. The rumor that the neighbor took the deposit, just in case, would surely encourage every second person to do the same. And if by that time there had also been problems with the payments of enterprises or the purchase of foreign currency, talk about the imminent collapse of the banking system could not have been avoided. Thirdly, you need to understand where the population would put the seized hryvnia. The money would go to buy dollars or to buy appliances, clothes, and food. the country would be hit by an inflation comparable in strength to the rise in prices in the mid-1990s. After that, it would be almost impossible to restore confidence in the hryvnia. What would the model proposed by Vladimir Stelmach lead to? There are two options. First, banks would issue billions of hryvnias through refinancing and the country would be overwhelmed by inflation. Second, the NBU would sooner or later stop issuing money, and then many institutions would become bankrupt. Personally, I don't see how mass refinancing would solve the problem. From this I conclude that under those conditions, Decree No. 576 was the most effective. Thanks to this act, the crisis was overcome already on the 10th of December. By that time, the situation in the cash currency market had normalized. Dollars were not yet in all exchange offices, often banks secretly resold them to money changers, but on the black market, prices had already decreased by that time. Instead of 6 to 7, and in some places even 11 USD. The currency was sold to everyone already at 5.7 to 5.8 hryvnia. The money changers themselves bought dollars in banks at 5.45. The fact that they gradually reduced their margins was the first evidence of the saturation of the country with currency. On December 10, ATMs were already working smoothly, and large Ukrainian banks began to remove restrictions on issuing money using cards of other institutions. They even promised to issue mortgage loans from the second half of the month, which disappeared as a species in the days of the crisis. For the NBU, the most important indicator of success was by no means the cash market. We feared that the population would take the ban on early withdrawal of deposits with hostility. Fortunately, citizens decided to leave money on deposits because it was safe. 2 or 3 days after the introduction of Decree No. 576, the tension in the financial system had already subsided, and a week later the population again incurred money on deposits, the yield on which increased to 20% per annum or more. At first it was a thin stream, but by the end of the month it had become a rather full-flowing river, although the outflow of funds still prevailed. On January 1, household deposits in hryvnia were 22.2 billion against 21.7 billion a week earlier. Already in March, the volume of deposits in the national currency returned to the pre-crisis level, above 27 billion. Confidence in banks recovered very quickly. On December 10, Acting Prime Minister Mykola Azarov said, "The National Bank can start a smooth transition from tough temporary measures to regulate the money and foreign exchange markets." Within a week, a full return to liquidity standards is expected, as well as a strict resumption of strict financial discipline. These words were true. I personally informed Nikolai Yanovich about the normalization of the situation. On the same day, the NBU and the heads of the 10 largest banks held an extended press conference, at which they spoke about the health of the system. All speakers in one way or another repeated the words of Azarov. I said that the financial situation is improving and the NBU intends to lift the restrictions on the monetary and foreign exchange markets introduced by Decree No. 576. It was said that the document would expire at the end of December and there was no point in prolonging it. The first signs of a positive trend and stabilization of the situation have appeared, I said then, and gave supporting data: a slowdown in the outflow of hryvnia deposits, an increase in dollar deposits, and stabilization in the cash currency market. No less optimistic were the statements of the heads of banks. They didn't even have to show well-being on their faces. The situation in the system was really improving. After the press conference, a massive PR campaign of banks followed, and the population gradually began to think not about early withdrawal of deposits, but about replenishing deposits. The first test of the strength of the system was the gradual lifting of restrictions on the issuance of cash through ATMs. From December 13, Ukrstsbank and Kreditprombank allowed to cash out any amount, and the first Ukrainian international bank, popular in Donbass, increased the limit from 1,500 hryvnias to $500. The population reacted to this calmly and did not rush to vacuum ATMs. I cannot but admit that one of the strongest stabilizers was the reappointment of Vladimir Stelmach to the post of head of the NBU. It is not so much about some special management skills. I consider the team of Sergei Tijipko very professional, and Vladimir Semenovich, on the contrary, I would not call him an ideal central banker. He is a classic apparatchik, prone to manual control, and there is no need to talk about carrying out serious reforms in the banking system. Rather, the authority of the elderly financier in the eyes of the population and authorities affected. The very fact of Volodymyr Stelmak's return to the National Bank stimulated the growth of confidence in the policy of the regulator. Shortly before this, Anatoly Galchinsky, quite logically, suggested resolving the issue of appointing the head of the NBU after the end of the presidential elections. However, his recommendation was not heeded. According to the legislation, after the resignation of Sergei Tijipko from the post of chairman of the board, I, as the first deputy, had the right to act as head of the NBU only for a month. The president was obliged to submit a candidacy for a new head of department for parliamentary approval. In those days they were called. Up to 10 applicants, including Vladimir Matvienko, Vladimir Stelmak, Alexander Shlapak, Oleg Rybachuk, David Svenya, Petro Poroshenko, Stanislav Azhevitin, Igor Yushko, Anatoly Shapovalov, Alexander Kiriv, Viktor Lisitsky, and even me. According to the information I had, Leonid Kuchma chose between two Vladimirs, Matvienko and Stelmak, and preferred the second. In mid-December, 2 appointments were made at the NBU. On the 14th, Nikolai Melnichuk deservedly got rid of the prefix and about to the position of Director of the Department of Foreign Exchange Regulation. And on December 16, the Verkhovna Rada approved the candidacy of Volodymyr Stelmak for the post of chairman of the board of the NBU. I came to the vote in Parliament well prepared for tricky questions. It turned out that the precautions were not superfluous, because some deputies demanded that Sergei Tijipko be summoned for a report. In reality, the demand would be from me, because it was I who signed all the documents. However, everything worked out. The whole voted for the appointment of Stelmak with a crazy number of votes, almost the entire composition. Already working in Odessa, I met the then Speaker of the Parliament, Volodymyr Lytvyn. He said, "You see, then there was such a situation that even if the horse were brought into the hall, everyone would vote for him." This was his description of the condition of the hall. I suspect that the horse surfaced in the conversation is not accidental. Litvin is a historian by education and simply remembered Caligula, who introduced his horse to the Senate. The NBU continued its actions to end the crisis. Decree No. 692 appeared on December 29, which was supposed to regulate the work of the banking system in January. At first glance, the crisis is already over. However, the NBU frankly feared that after the lifting of the ban on withdrawal of deposits, the population would rush to withdraw deposits and everything would happen again. Therefore, the regulator decided to take proactive measures and closely monitor what is happening. Since January, we have abandoned the weekly publication of the results of the banking system and switched to a monthly format. The press and bankers were outraged, but the move proved necessary. If the population had rushed to take deposits in the first week of January and written about it in the newspapers, we could not have avoided a repeat of the crisis. Acting in an atmosphere of information secrecy, by the end of January, the NBU stated with satisfaction, over the month, the balances on the accounts of the population increased by UAH 2.3 billion, of which 1.5 billion were in national currency. The fact that almost all other indicators worsened no longer mattered. Decree No. 692 became more of a declaration in which the NBU proclaimed the normalization of the situation. The regulator said that almost all restrictions have been lifted, and banks can turn to the state for support at any time. Some barriers, however, remain. For example, for cash withdrawal by enterprises within 80,000 UAH per month or for the purchase of currency for individual items. We temporarily banned banks from buying dollars for their own needs. The NBU also retained the possibility of conducting cash interventions, although it never used it. The processing of stabilization loans continued, but the need for them had already disappeared. During the decision, I had déjà vu. For a few days, I again found myself acting as head of the National Bank, because Vladimir Stelmak had gone on vacation. Obviously, he decided to see how events would unfold after Decree No. 692 came into force in order to have the opportunity to return from vacation and change everything in reserve. Fortunately, there were no surprises, and already on January 13, Resolution No. 692 was cancelled. The population did not rush to take deposits, and enterprises did not rush to cash out their accounts. After half a month of intense monitoring, the National Bank declared with a calm heart that the crisis was completely over. In early February, Stelmak invited me and Alexander Shlapak to a small office. He never found compromising evidence on us and therefore decided to act differently. Vladimir Semyonovich began to say in harsh tones that we are not bankers and have no right to occupy such high positions. I then looked at Alexander Schlapak and realized that he could break loose at any moment. He was always very bad at speaking in harsh tones, and on one occasion he even loudly kicked one of the brightest characters in the banking system out of his office. So I urgently had to defuse the situation. Aren't you ashamed, Vladimir Semyonovich? If you feel uncomfortable working with us, say so, I said something like that then. After that, Vladimir Stelmak immediately admitted that he was uncomfortable. We agreed that both vice presidents would write resignations of their own free will. This ended the meeting. The parting with the NBU staff was calm and friendly. With the exception of a few people, the deputy chairman did not have a personal conflict with any of the employees, and they still have excellent relations with many. Then Vladimir Stelmak told the press that he would have fired us in no time if he had known about the signed secret documents right away. And then it was as always, those who always greeted and bowed low, crossed to the other side of the street, pretending not to notice you. Over time, I became the first deputy head of the Odessa Regional Administration. Moreover, this appointment in the post-revolutionary period was very difficult. I am flattered that, despite the bad-mouthing, me and Alexander Schlapak are remembered as deputy chairman of the NBU who saved the banking system. The words of the accusations have almost been forgotten, and the new leadership of the regulator managed to make an absurd decision on a sudden revaluation of the hryvnia. I argue that this would never have happened if the regulator had continued to be led by the board, and not by the sole head. The stability of the banking system was proved by the events of 2007, when President Viktor Yushchenko signed a decree on the dissolution of the Verkhovna Rada and the appointment of early parliamentary elections. This created another wave of political instability in the country. Again, thousands of people took to the Maidan. Again, harsh statements were made. However, the degree of stability of the financial system is such that not a single indicator faltered. Of course, my friends called me again and asked what to do. I answered, the same as in 2004, do not fuss. As a result, the National Bank did not even have to take emergency measures. The new resolution replaced the credit of trust formed in 2004. The population and businesses remember that the NBU is able to keep the banking system under control. I think this is the best confirmation of what we have done. I would very much like this book, at least in part, to be read by the current and future government, the central bank, financiers and, possibly, ordinary people. Today the world is facing the challenges of global crises, from financial to food. But you should never fold your hands. A holy faith in the country and in yourself can change, if not everything, then a lot. Everything is in our hands and our heads. Comments. Alexander Schlapak, in 2002 to 2004, Deputy Chairman of the Board of the National Bank, Curator of Banking Supervision. About the crisis and its overcoming. In November 2004, certain patriotic websites began calling on depositors to withdraw their money from banks that were in one way or another connected with individuals from the opposite camp. In contrast to October, when a targeted attack was launched against the Mria Bank, this time the list included systemic institutions. As a result of information attacks, investors began to leave them. The situation was serious because the fall of one of them could affect the stability of the entire financial system. In Ukraine, people are not used to trusting the authorities. After an inflation of 10,000% a year, after the hryvnia exchange rate fell by half in just a month, the people are very sensitive to the crisis in power. As soon as the population sees a difficult situation in politics or the economy, they immediately begin to take deposits from banks. Legal entities were the first to respond that year. Already in September, for the first time, banks did not receive an inflow of hryvnia through the issue of the NBU. This happened because enterprises began to delay the receipt of foreign exchange earnings. Then the population became active. Withdrawal of deposits began in October, which, closer to December, acquired the character of a geometric progression. In the last days of November, money was withdrawn from deposits en masse. As usual, the first to orient themselves were large investors, who make up about 5% of the total. These people read the newspapers, observe the situation, and literally smell trouble. Then small depositors flocked to the banks. The situation worsened unevenly. State institutions suffered less than others, Oschadbank and Ukregzimbank. But the rest of the banks in the top 10 then battered quite seriously. Basically, the institutions that, one way or another, got into the center of political discussions, were affected. For example, the banks of the TAS group, which belonged to the head of the White-Blue headquarters, Sergei Tijipko. Oddly enough, the appeals of the Orange sites worked, and people really took money from banks for political reasons. Further, worse. TAS is a small bank. However, to drown Prominvestbank and Aval mentioned on the same sites means to threaten the entire financial system. Potential hole, which we saw in the balance of Aval in just a week, amounted to about 500 million hryvnia. It did not appear by chance. Problems accumulated in the bank for a long time. The management had a clear desire to keep up with private in terms of development indicators, so they actively worked on short resources. It was a strategic mistake, although they clearly weighed all the options and counted on the money of the population. However, with the start of the election campaign, there was an outflow of deposits, and the systemic bank was the first to come under fire. Then the Cabinet of Ministers came up with an initiative to withdraw the accounts of the customs and the pension fund from Aval. All this coincided in time. Under those conditions, Bank received only money for the purchase of Krivoristal, about UAH 4 billion. Although, it must be admitted, the head of the institution, Boris Timunkin, as one of the most sensible bankers, perfectly understood the systemic nature of the crisis, so he was one of the most active participants in the development of Decree No. 576. At the initiative of the banks themselves, first once a week, and then almost daily, the NBU board met with the heads of the largest institutions and discussed the situation. Each banker came with his own balance and spoke frankly about all the problems. Thanks to this openness, we detected the most dangerous trends in the system in time. Back in mid-October, the National Bank believed that the crisis could be extinguished by pinpoint strike. We understood very well that there were no macroeconomic prerequisites for the emergence of a rush. There was a lack of currency on the streets, because exporters withheld revenues abroad, and enterprises operating inside the country, under various pretexts, took capital out of the country. The artificial nature of the crisis was obvious, and it could well be brought down by a simple increase in control over the operations of banks. However, in November, when the political confrontation reached its peak and people took to the Maidan, the situation changed. There were still no macroeconomic threats, but a systemic crisis was looming for completely different reasons. Moreover, half-hearted measures no longer saved the situation, radical solutions were required. We noted a sharp drop in people's confidence in the banking sector. The politicians' statements were the latest spark that set fire to the situation. It was then, after a long debate, that Decree No. 576 came into being. Being the result of the joint work of bankers and the regulator, it proved its effectiveness. When developing the document, we tried to take into account all reasonable suggestions. Naturally, there were those who disagreed. Sergei Beryak, then a People's Deputy and a member of the Council of the National Bank, followed the discussion closely, but there were more doubts in his remarks than support. At midnight on November 28, when Decree No. 576 was formulated, Beryak called me. According to him, he consulted with Vladimir Stelmak, who opposed the introduction of such restrictions. I asked him to pass the phone to him, and Vladimir Semyonovich began to proofread me for a long time, saying that it was impossible to do this. When I asked what he was suggesting, Stelmak said amazing words: "The banks themselves are to blame, let them choose themselves." The next morning, in the building of the National Bank, we met with Arseniy Yatsenyuk to look through the text of Resolution No. 576, already read by lawyers. I asked him to call Stelmak back. Perhaps he could understand. The ex-chairman of the NBU Arseniy Petrovich dialed Vladimir Semenovich, and he repeated exactly what the same thing he told me. We realized that there would be no constructive proposals from Stelmak. After that, all members of the board of the National Bank endorsed the resolution. The promptness of the decision was such that there was not even the slightest leak of information. It was adopted in one evening, and the next morning it came into force. No one had time to take advantage of the rumors, run and withdraw money. Decree No. 576 turned out to be tough, but in crisis conditions we could not play liberalism. It was the draconian measures that saved the banking system from collapse. One of the key areas of work was control over the work of the foreign exchange market, in particular, scrupulous verification of foreign economic contracts of Ukrainian enterprises and control over cash transactions. In December, the regulator cut off a lot of applications for the purchase of non-cash currency. For example, during the crisis, payment for oil imports increased by 2 or 3 times. Our experts analyzed this data and realized that something was wrong. The National Bank immediately sent applications to all 6 oil refineries with a request to list the companies that supply them with raw materials. The refineries went to meet us halfway, because they themselves wanted to get rid of those firms that, under the guise of importing raw materials, were withdrawing capital abroad. As a result, only for oil products and crude oil, the NBU cut off almost half of the contracts. This was done not on the principle of, they gave it to him, that didn't, but on the basis of an objective analysis. For example, we demanded from the contractors themselves a certificate from the refinery that deliveries were actually taking place. As a rule, there was no answer. The regulator also invited bankers. The NBU was quite tough on banks whose clients withheld foreign exchange earnings. We required institutions to act as currency control agents. The regulator actively used Article 37 of the law on foreign economic activity, according to which sanctions are imposed against unscrupulous enterprises if they violate the 90-day rule. When the regulator began to import into the country and sell cash currency, almost all banks wished to become agents for its distribution. Our goal was to keep the price of dollars within 2% on either side of the official rate. To control the fulfillment of the requirements of the regulator, special teams were created that traveled around the regions. The measure proved to be effective. About 24 banks of the NBU were excluded from cash sales sessions, because their agents traded currency for more than we demanded. For example, in Zittima it turned out that in the exchange office of a respected bank, everything that was intended for the day was sold in 3 minutes. The regulator sold a huge amount of stabilization currency to the bank, and the institution decided not to sell more than $100 per person. However, immediately after receiving the money, a large number of the same type of operations were carried out in the same name. We filed claims, and the bank replied, "Did you sell more than $100? Didn't sell. Who cares if it sold 250 times?" The National Bank reacted harshly to such statements. Maybe we sometimes went too far, but everyone should have understood the seriousness of the regulator's intentions. Sometimes even large banks were deprived of the right to participate in the purchase of cash currency from the NBU. The meaning of the actions of the regulator was reduced to one thing. We boldly enough took these not very popular steps only because we understood the artificial nature of the crisis. We were aware that sooner or later the elections would end, and the banking system should not suffer in any way. The National Bank then sent letters to Leonid Kuchma and Viktor Yushchenko. We asked the Cabinet of Ministers for only one thing: to leave the banking system alone and not use it as an argument in political competitions. It took a month for the intermediate stabilization of the market and another one to eliminate the entire crisis. In December, it became clear that no matter what the results of the third round of the presidential elections are, no one will challenge them. After our appeals, politicians finally stopped talking about the collapse of the financial system. For their part, the NBU and banks worked with the press to the maximum. The head of AVL, Alexander Durkak, spoke competently and often in the media. The chairman of Privatbank, Alexander Dubilat, and Ukasetsbank, Boris Tymonkin, did not leave the TV screens. Acting head of the National Bank, Arseniy Yatsenyuk, practically lived in studios and at the same time looked calm and confident. It is always very important that the first leader does not hide from the population, especially in such a difficult situation. Although, of course, in general, money loves silence. Alexander Shlapak. About leaving the National Bank. Vladimir Stelmak is a classic leader of the Soviet era, prone to authoritarian management of the banking system in a manual mode. The basic principle of such an administrator is not to have subordinates who would be smarter than you. In this case, the chairman of the board makes all important decisions independently. And the head of the necessary department is called on the carpet, and he is told in appropriate terms who he is and what he should do. Therefore, it is quite natural that neither Arseniy Yatsenyuk nor I could work with Stelmak. At one time, Sergei Tijipko forced the National Bank to discuss every important decision with bankers. We did not really like it, but the chairman of the board demanded that the documents be accepted publicly, especially if it concerned conflict situations. Sometimes Tijipko arranged a dispute between the NBU and the Association of Ukrainian Banks, and as a result, he forced us to look for a different compromise solution because neither side looked more convincing than the other. Under Stelmach, contacts with the AUB and other associations were severed. Only once he held a joint meeting with large banks, and then in order to sum up the results of the work. It is even hard to imagine that a revaluation on April 21, 2005 could happen under Tjipko. The NBU board would never take such a step. However, after our departure, Stelmach did not assemble the board for more than a year and led the National Bank alone. The revaluation became a natural consequence of Stelmach's authoritarianism. After Vladimir Semenovich came to the National Bank, I assumed that we would be able to work with him. And even positively set up Arseniy Yatsenyuk, who was extremely skeptical about the prospect of such cooperation. Time has shown that he was right. In the early days, Stelmach did not communicate with us at all and in his own way entered into the course of affairs. At meetings and conference calls held by Yatsenyuk, he only listened in silence. During casual meetings, he behaved benevolently, although restrainedly. The vice presidents continued to deal with current issues and overcoming the crisis. When the end of December came and it was time to prepare a replacement for Decree No. 576, Stelmach left the country for several days, leaving the banking system to us. Yatsenyuk had to again act as acting head of the board and sign Decree No. 692. The worst fears were not confirmed, and soon Stelmach cancelled this document with a light soul. In mid-January, it became clear that the crisis was over. Around the same time, there was a conflict around the Chernihiv Bank, which since 2004 was prosecuted by the Supervision of Laundering Operations. It turned out that the chairman of the board of this washing came to the chairman of the board of the NBU. Somehow he convinced Stelmach that the claims of the National Bank were unfounded. Vladimir Semyonovich summoned me and asked why the supervision persecuted an honest institution. Why didn't you invite me when you had a Chernigov banker at your reception? I asked and showed folders with evidence of laundering operations. As a compromise, I suggested sending another check to the bank in order to make a final decision based on its results. Stelmach agreed, but a few days later I was surprised to find out that he personally withdrew the commission by phone. As a result, the charges against the bank were dropped. This was not the only unpleasant episode. Back in December, people who behaved extremely unworthily during the crisis began to visit Stelmach's office. In early January, when it became clear that the worst was over, Stelmach stripped Yatsenyuk and me of their powers and transferred control of the National Bank to other deputies. We have drivers and secretaries at our disposal. Vladimir Semenovich avoided communication with me and with Arseniy Petrovich, and at meetings he said that he had no complaints against us. However, at the same time, he carefully collected dirt on us. Obviously, the search ended in nothing, so about a week later Stelmach invited us to a separate office and bluntly stated, we must leave the National Bank because we do not fit into his vision of the further development of the banking system. Shortly thereafter, Stelmach abolished the General Department of Banking Supervision, which I had previously supervised. Vadim Pushkarev, the head of this division, he also fired. I believe that in fact Stelmach was guided not by professional, but exclusively by personal motives. His goal was to get rid of all the people from the team of his predecessor and apply the methods of manual management in supervision. That is why the General Department was abolished, which then worked as a well-established system. That is why, instead of openness in the Tihitkov style, creativity in the Yatsenyuk style, closeness and silence in the Stelmach style returned to the National Bank. Alexander Durkak, in 2004, co-owner and chairman of the board of Aval Bank. The peak of the crisis came on Saturday, November 27, although it began much earlier. In late August, early September, the banking system had problems with the inflow of resources. Prior to this, all banks, especially those with a large network, got used to the idea that you can buy exactly as many resources as you need on the market. In fact, Aval and Privatbank dictated prices on the market. If it was necessary to raise an additional billion, we raised interest rates by 0.5 percentage point, and in a month and a half the balance was restored. However, since about September, we have felt a shortage. In part, Aval then made a little mistake with the rates, maybe they lowered them unnecessarily. However, there was no such thing that the volume of deposits continued to grow in other banks, but not in ours. Then I realized that this is not only Aval's problem. Then the presidential election campaign started. Nervousness in society grew, people began to think about tomorrow. In October, early November, when huge social payments began, the demand for cash currency increased sharply. People massively withdrew hryvnia from deposits and converted it into currency. On October 12, I had a conversation with the first deputy chairman of the NBU, Arseniy Yatsenyuk. I asked him what was going on in the market. He assured that it's okay, the national bank will throw away $1 billion and cover the increased demand. I objected that, according to the sensations, $1 billion would not be enough, you need to be ready to throw away 2 and 3. Although then neither I nor he could imagine the scale of the crisis. Soon the national bank began to import and distribute cash dollars, but this did not solve the problem. On the contrary, the more currency was thrown in, the more hysteria was whipped up in society. Banks were busy holding the hryvnia by any means. By the beginning of November, it became clear that everything rests on parole. Actually, the crisis began on November 27. After the second round of elections, the political split of the country was obvious. On Friday, the Donetsk Regional Council voted for the formation of a federation, and on Saturday and Sunday a congress was held in Severodonetsk. Active political events unfolded throughout the country. On Saturday, according to tradition, I went to the book market. Mykola Tkachenko, the director of the branch, called me from Donetsk and told me that all the banks in the city had problems. I think what we feared has begun, he said. Crowds of people stood near all the banks and withdrew money. This was accompanied by screams and, in some branches, smashing windows and overturning ATMs. On the same day, the excitement spread to the rest of the country. All Saturday I called the directors in the regions and the heads of departments of the National Bank. I spoke with Arseniy Yatsenyuk and Alexander Shlapak. The last call came at about 7 p.m. I tried to get answers to 2 questions. First, money is taken only from us or in other banks too. And the second, it happens only in Donetsk and Luhansk or in all regions. It turned out that the most acute situation was in Donetsk, Lugansk, Kiev and, oddly enough, in Lvov. In Zhytomyr, Odessa and Kharkov, we practically did not feel any sharp shocks. Some regional factors probably played a role in this process. It was also important what kind of policy our people led on the ground. On Saturday and Sunday, hysteria was observed in Kiev. The crisis was aggravated by the fact that there was no one to back up ATMs with cash on weekends. Our processing center was working, employees came to the office to observe the situation. They found about 300 idle ATMs. Then came the collection. There were queues of 15 to 20 people at the ATMs of all institutions. There were a lot of people, they did not have the opportunity to additionally withdraw money through the cash desk of banks, as on weekdays. In addition, the very procedure of cashing out at an ATM took some time. The NBU board and the banks themselves knew that the crisis was not provoked by problems within the system. Aval had a normal payment calendar, we worked as usual. The situation turned out to be paradoxical. On the one hand, the larger the bank, the more money flows into it. On the other hand, the larger the network, the faster the money leaves it. Over the weekend and Monday, we lost 500 million hryvnia. At that time, we had about 600 to 700 million hryvnias in all cash desks. And the same amount on the correspondent account. It became clear, if the withdrawal continues, there will be enough money for a maximum of a day, and then everything will start to collapse. Even in restricted mode. The biggest concern was our VIP clients. All outstanding people of the country kept their deposits in Aval. Most importantly, some of them started to sound the alarm initially, while others remained calm even when it was over. This is very revealing. I will not name names, but I made completely unexpected discoveries for myself. The board of Aval met the next day. On Sunday, the situation was already clear, and everyone felt anxious. At about 9:30, Fyodor and I were sitting in his office and talking on the phone with Arseniy Yatsenyuk. Then I spoke with Boris Timunkin and other colleagues. Everyone insisted on meeting on Sunday, but the National Bank was not up to it. The board of the NBU definitely met that day, but the banks were not invited to this meeting. At about 16:00 we already clearly knew what they were offering. We were read on the phone, and we agreed or not. On Monday, things got out of control. As far as I know, Yatsenyuk tried to talk to both sides of the election campaign, but no one interfered. I'm not sure if that would help, but why not give it a try? A meeting with the NBU board was scheduled for 18:00 on Monday. Representatives of the largest banks gathered. A very serious conversation took place. We sat almost until 20:30. We have made the text proposed by the National Bank more radical. We managed to convince Yatsenyuk that either the most radical measures should be taken, or nothing can be stopped. In practice, the decision was adopted from the leaf, by ear. The introduction of a moratorium on cash withdrawals, in my opinion, was the main measure that made it possible to save the banking system. It was clear to us that the legal position of these restrictions was vulnerable, but we sought to save the banking system. And this could only be done together. We urged the National Bank and met with support. The main merit of the composition of the NBU board is that they had the courage to make a decision. Imagine that the decision did not work, and the system collapsed. Those who prepared and signed the document would go to jail. The National Bank made a very good decision on refinancing. No offense to Yatsenyuk, Schlapak and their colleagues, but I am sure that a classic banker in those conditions could not have imposed a moratorium on withdrawals of deposits. To do this, it was necessary to see the situation more broadly. When I returned from the National Bank on Monday, the board members were sitting, drinking vodka and thinking about where to go to work tomorrow. It was easier because it became clear where to go. I myself began to count how much cash I had, and could not. One of my deputies said that he had 24,000 left for the rest of his life. Everything else was in the bank. In fact, we have become hostages of the situation. Everything we had was in our bank. I admit that what we experienced in those days contributed to our sale of the bank in 2005. It was not only my personal fate that was at stake. The fate of 18,000 employees and millions of customers was in the hands of the board. We had a huge responsibility. In this case, it is not enough just to beat yourself in the chest with your fist. On Tuesday morning I was driving to work, and there was no more confusion. I planned who I would call, what to say, who should run where, how to assemble the system. Back then, we had daily conference calls with the entire system. We had to maintain internal stability. The people on the ground had to feel the confidence of the government. Much was revealed in those circumstances. It's always interesting to see who runs first. These turned out to be the largest clients who received the largest loans. I had to call them and remind them that the loans were still not returned. Roughly speaking, with a stick to drive back to the bank. Although, we must give them their due, everyone quickly fussed and returned. The system worked. It was very difficult to get a stabilization loan, but we succeeded. It was an example of almost round-the-clock work of the National Bank with us and with our credit affairs for 10 days. We felt the stop of the outflow approximately on the 10th day after the introduction of restrictions. At first it was a timid zero. A week later we lifted restrictions on the issuance of money through ATMs, as well as from current and foreign currency accounts. People began to gradually believe that the banks would not collapse. When I went skiing on January 2nd, there was still no complete confidence in the victory over the crisis. However, I would never have gone if I had not felt that the worst was behind me. The heads of banks went through a good school when they communicated with each other almost daily for a month. For a while, we forgot who is competing with whom. Once or twice a week, the NBU held conference calls with large banks. It was very correct. If someone started to use the situation to their advantage, neither 100, nor 200, nor 300 million would save anyone. The account ran into the billions of dollars. I am very grateful to Yatsenyuk. This is not a common phrase. At that time, my colleagues and I exchanged views and agreed that we survived thanks to him and the employees of the National Bank. If the National Bank started lecturing and blaming that they themselves are to blame, everything would be lost. Analyzing the situation on the market, I did not see any global miscalculations on our part then. The factors that worked were beyond our influence in terms of their volume. I could manage fluctuations within 100,000 200 million hryvnia per day. But when there are fluctuations worth 1 billion hryvnias, they cannot be managed if you have at least 2 Harvards and 10 foreign languages. Kayman Zahariev, in 2004, head of the Ukrainian representative office of the European Bank for Reconstruction and Development. The tense weeks and months of the 2004 presidential election and the Orange Revolution will always remain in my memory. These were very turbulent times. At that time, our bank, the largest financial investor in Ukraine, was preparing various strategies that should have helped to adequately meet the potential destruction. Perhaps even chaos and violence. We had to write contingency plans to protect our people, investments, and clients. I remember when task forces were formed to monitor the financial condition of our clients in order to detect early signs of liquidity problems in them. We did the same with respect to our main partners among Ukrainian banks. EBRD managers in London have gained good experience during financial crises in other Eastern European countries. One of the most significant risks that we immediately identified is the risk of a collapse of the banking system and a sharp devaluation of the hryvnia. Tough and timely measures taken by the National Bank of Ukraine were one of the strongest stabilizing factors at that time. They prevented a slide into financial, economic, and political chaos, giving the country the opportunity to endure and emerge from the crisis with strengthened democracy, financial and banking systems. Boris Timonkin, in the fall of 2004, chairman of the board of Yatsenyuk. About the crisis. The outflow of money from the banking system began in September. This process was not one-sided, some of the clients took money, and some brought it. But in general, the rate of growth of balances on deposits fell across the system. Roughly speaking, we are used to attracting 150 million hryvnias from the population per month, and in September the figure fell to 30 million. Since October, the growth has become negative. The situation was especially critical in the last week of November, when money was simply swept out of the banks. On a national scale, the outflow amounted to billions of hryvnias, in Bank, about 50 million hryvnias. Daily, on average, the liquid part of assets in the banking system is maintained at the level of 15% of the balance. Literally in a week, banks lost half of this amount and the liquidity reserve moved into the region of 5 to 8%. One could speak of an imminent crisis. If this continued for another week, liquidity would drop to zero. This would mean the bankruptcy of the entire system. In such situations, the support of the owners is vital. In the past 5 years, banks have been dying solely because of the incorrect attitude of shareholders. In the 1990s, by contrast, bankruptcies were caused by the mistakes and abuses of managers. Yatsenyuk in the fall of 2004 felt relatively well. Interpipe Group enterprises increased their balances on their accounts from the usual UAH 100 to 200 million. Up to approximately 700 million. Thanks to the money of shareholders, Yatsenyuk, before the introduction of Decree No. 576, did not begin to limit the issuance of deposits. We raised our deposit rates, and the staff actively urged people to leave their money in the bank. There were situations when a person withdrew a deposit and transferred it to a personal cell. Then, after a month and a half, the money was returned to the deposit from there. Other clients were interested in the very fact that deposits were issued. They took money out and immediately put it in. Of course, political events added to the negative. Yatsenyuk worked throughout Ukraine, and among our employees there were many supporters of both orange and white-blue. Once, a situation even arose when, at the staff level, the transfer of money from one region of the country to another was sabotaged. However, we severely suppressed this and other manifestations of political confrontation. We had to prove to employees that we are an infrastructural part of the economy and do not have the right to a political position during working hours. Just as a doctor cannot ask a patient what party he is from. As a result, the bank worked like clockwork. Of course, the staff had heard enough from customers of all kinds, but in general, people behaved with dignity. Shareholders could not solve all our problems, but their help gave confidence. At meetings at the National Bank, I felt much calmer than most of my colleagues. Probably, Alexander Dubilat, head of Private Bank, was also calm. On the contrary, retail-oriented banks that are not part of financial and industrial groups found themselves in a particularly difficult situation. In a situation where the population withdrew deposits ahead of schedule, there was no one to support the banks with money. The history of Aval is indicative. Its owners, at that time they were also managers, were not poor people. However, they could not find hundreds of millions of hryvnias to plug the hole in liabilities. This is an example of how the strength of a great bank became its main weakness in just 3 weeks. Through a huge branch network and ATMs, money flowed away, as if through a sieve. It is hard to imagine how much nerves it cost managers. I think the 2004 crisis strengthened their willingness to sell the bank in 2005. It became obvious that the work of a lifetime could be lost within a month. The national bank in a crisis situation showed itself from the best side. He performed the main function, the guarantor of stability. The leaders of the NBU spoke a lot, promising people to keep the hryvnia exchange rate. Of course, the statements of politicians hit the financial system hard. This was the main cause of the fall 2004 crisis. The National Bank unwittingly fell into the center of a political hoax, but managed to get out of it with dignity. From a practical point of view, one of the main causes of the crisis is the great injustice of the law. The norms of the Civil Code allow early withdrawal of deposits. It turns out that a small group of people, a few percent of the total number of depositors, threatens the well-being of everyone else. On average, approximately 40% of a bank's liabilities are deposits from individuals. If half of this money is gone in a short time, the bank will go bankrupt. The owners of large deposits have always been nervous. At the slightest hint of danger, they instantly withdraw their savings, and these are huge sums. The majority of individual clients remain the losers, as well as legal entities that do not have the right to cash out their accounts without justification. Banks, on the other hand, cannot repay loans ahead of schedule in order to maintain their liquidity. It turns out that the entire legal part of the country's economy is a hostage to a group of nervous people who have the law on their side. Boris Timunkin. About the meeting at the National Bank. Decree number 576 did not appear out of nowhere. Long before the evening of November 29, the leaders of the largest banks gathered at the NBU more than once and discussed the situation in detail. Each of us spoke for 5 minutes about the state of our assets and liabilities, about threats and measures taken. Along the way, the speaker was asked clarifying questions. Then Arseniy Yatsenyuk summed up, and we began to consult on what to do next. Naturally, after such a meeting, each of the top managers came to their bank and gathered the leaders. As a result, the circle of people involved in solving the problem was very wide. In Bank, the Asset and Liability Management Committee met almost every other day, about 5 members, plus a secretary and subordinates of each of us. The situation was impossible to hide. Nevertheless, we were not afraid of information leakage. No one would make sudden movements in conditions when everyone is standing on the edge of the abyss. In addition, we discussed in advance what to say to the press. The decisive meeting took place on the evening before the adoption of Resolution number 576. It was a real brainstorming session. It was evident that people came to work out a clear solution. We must pay tribute to the bankers. The atmosphere at the meetings was constructive and friendly. It was very easy to communicate with the National Bank. Both Arseniy Yatsenyuk and Alexander Shlapak heard the interlocutors and did not try to impose their point of view. Proposals were voiced, they were immediately discussed, everyone could express their views. Already by the time the decision was adopted, a package of measures was emerging, the main of which was the suspension of the issuance of deposits. They did not work for themselves, but for a cause. No one even tried to pursue their own interests. The atmosphere did not favor this. It was very reminiscent of the style of work of self-regulatory organizations, the Association of Ukrainian Banks, PFDS. It is completely out of the question for high-level professional people to pull the blanket over themselves. If this happens, the insolent person is immediately ridiculed, and he initially has no chance of making such a decision. I have repeatedly noticed that in a professional environment, all games immediately leave. There is no press and spectators, and there is no one to tell how poor you are. Everyone will smile, and then you will laugh at yourself. Everyone was quite active: Alexander Dubelet, Sergei Mishta, Igor Gelenko, Igor Franskevich. Alexander Sorokin kept a little aloof. He is a strong administrator and a powerful apparatchik, but not a polemicist. Vladimir Matvienko never appeared at the meetings. Instead of him, Tamara Shultsenko came from Prominvestbank. Alexander Durkak, chairman of the board of AVL, behaved very worthily. He already then went through the procedure for obtaining a stabilization loan and learned about himself a lot of new things. The problem was that the National Bank was operationally unprepared for situations where the system bank brings tons of documentation. Specialists in a short time had to evaluate the legal purity of the projects for which refinancing was issued. Banks have loan managers, project analysts, and client relations specialists. The NBU did not have these technologies, and it had to quickly create working structures. This is a huge job. At the same time, the employees of the National Bank are civil servants. Still fresh were the memories of the affairs of INKO and the bank, Ukraine. Nobody wanted to expose themselves. The next day, the prosecutor could come to them and ask a question. Of course, all banks were different, each had a special balance sheet structure. The regulator tried not to approve a single item in Decree No. 576 without the consent of the institutions. As a result, even if someone's interests were infringed, it was clear that in a critical situation this was the best solution. In turn, it was easier for the National Bank from the fact that it was supported by the banking system on all key issues. When all the participants of the meeting dispersed, the NBU specialists continued to prepare the document. Naturally, legal risks were analyzed at the same time. We all understood that the decision could be cancelled by the court. A large-scale legal attack could have been provoked, as a result of which hundreds of courts would have simultaneously blocked the validity of the documents. However, this did not happen. Partly due to the fact that a good legal construction was found. Articles of the law, on the National Bank, allowed to suspend operations that carry risks for banks. But much more important was the fact that both the courts and the depositors heeded our arguments. Immediately after the entry into force of the resolution, an intensive PR campaign was carried out, for which the largest banks formed a common budget. In addition, each of us communicated with the media, relying on our own resources and connections. The main speakers were Arseniy Yatsenyuk, Igor Galenko, me and Alexander Jubilat. For several weeks, we conducted explanatory work through all the media. No one had to be told exactly what to say. Everyone was professional, understood the situation and had a strong motivation. Journalists were sympathetic to the problems of banks and did not try to look for a double bottom in our words. They just came, asked, filmed. In parallel, each head of the bank held daily conference calls. We literally forced employees to go out to people and explain to them the essence of the problem. Our population has always been very difficult to deceive. The inhabitants of Ukraine went through a good Soviet school. I say a word, two in my mind, and instinctively feel the untruth. However, in those conditions it was not necessary to lie. All measures prescribed in Resolution No. 576 were clear and transparent. When there is no meanness, then there is no intrigue. The panic was brought down literally 3 days after Decree No. 576 came into force. Queues disappeared, and with them nervousness. After all, the main tension was caused by the very fact of the presence of queues. A man walks past the bank, sees a crowd at the entrance, and, just in case, stands in the tail. There were many technical problems that had to be solved for almost the entire remaining month. One of the main points is to contain the panic in the cash foreign exchange market. Bank then introduced a high commission for buying dollars. At first, it reached 3 to 5% of the transaction amount. We carefully studied the legal documents and realized that we would win any court. The National Bank may limit exchange rate fluctuations, but the size of the commission remains the prerogative of the bank. Thanks to commissions, we kept the situation under control. They stopped taking money out of the bank. Then this process was usually headed by structures engaged in shadow operations. In the morning they traveled around banks in minibuses and bought up almost all the currency. As a result, roughly speaking, all the dollars ended on the fifth person, and the population began to get nervous. The commission struck at the most terrible element of any deficit, the panicky belief that tomorrow there will be nothing at all. Fear makes people do stupid things. It is because of this that in the eastern regions the exchange rate jumped to 7 USD. The commission changed the situation radically. When a person was in dire need of currency, he bought it even with an additional fee. With a commission of 10%, the dollar cost about 5.7 hryvnia. However, $1 million could not be taken out of the cash register in this way. As a result, when people saw that dollars, although expensive, were being sold, they postponed the purchase. As the volume of currency sales decreased, the size of the commission gradually decreased. Within a month, it fell first to 1% and then to 0.1%. Naturally, Bank almost completely stopped lending, even within the already approved limits. We used any excuse not to give money, but there were no particular conflicts about this. Enterprises themselves have reduced the demand for finance. In a critical situation, they behaved in exactly the opposite way to the population, which sought to withdraw money and buy apartments, salt and matches. Companies clamped down on all expenses and entered the crisis prepared. They suspended investment programs and postponed the start of major projects. It was noticeable that the balances on the accounts of enterprises increased. Therefore, we can say with confidence that the banking system was saved by legal entities. Yes, in general, there were those in the system who sought to withdraw money abroad. However, the NBU Supervision Department clearly knew the banks through which such operations were carried out. On the whole, the emotional atmosphere in autumn-winter 2004 was rather positive. It was a time of team struggle and setting clear goals. Critical situations always remain vivid memories. It was a unique experience. In world history, most banking crises ended with the collapse of the financial system and its many years of recovery. We managed to get out of the crisis on our own. Later, the events of that time surfaced in conversations with rating agencies. They talked about potential risks, and we answered that our bank had already experienced more than one crisis. They managed to survive in 1998, when the dollar exchange rate almost tripled. Overcame the crisis of 2004, when the chances of survival were very low. This is concrete evidence that both the economy and the banking system of Ukraine have strong immunity. Andrei Pyshny, in 2004, first deputy chairman of the board of Oschadbank. I am glad that we had a unique experience in 2004. I am sure that my colleagues will share this conviction. The joy is explained by the fact that the crisis was successfully localized. If tough, timely, and even charismatic measures had not been taken, my optimism would not be so bright now. Before the autumn-winter problems, a dress rehearsal took place. In the summer of 2004, a banking crisis occurred in Russia, which had echoes in Ukraine. Our banks, which kept large balances on correspondent accounts in rubles, suffered. The National Bank under those conditions took a number of preventive measures. Thanks to the Russians, a kind of textbook on overcoming critical situations was created. In addition, we received the appropriate psychological attitude. In Ukraine, the crisis did not develop all at once. First, in the fall of 2004, there was a problem with the currency. Part of the liquidity had to go to the purchase of cash dollars to ensure the stability of the exchange rate. Political tensions were rising, and banks were gradually winding down active operations. First of all, this resulted in limiting the limits on working with each other. Later, the volume of lending to customers decreased. At the end of November, some of our clients complained about non-payments at Aval Bank. This happened even before the peak of the crisis, which came in November. A critical mass of factors was formed, detonated by the Congress in Severodonetsk, speeches by the president and leaders of political parties, who, instead of resolving the situation and supporting banks, decided to engage in mutual criticism. It all started with the Lugansk and Donetsk regions. Gradually, the crisis spread to the western regions, with the difference that there was no hysteria. It was Thursday through Friday, shortly before the Congress in Severodonetsk. The head of the Luhansk regional department of Oschadbank called me and reported that they were having a strategic outflow of cash through the ATM network. I had to collect ATMs 2 or 3 times a day. On Saturday, Arseniy Yatsenyuk called me and asked what we had in Lugansk. I contacted the head of the regional office. He replied that the problem only worsened. Payments on payment cards through the network of ATMs were stopped by Pravex Bank, Aval, and Privat Bank. Naturally, the entire flow of customers poured into Oschadbank's ATMs. In parallel, on Friday through Saturday, queues began to line up in our branches. Gradually, the bank faced the fact that our throughput did not allow serving everyone. A hysterical avalanche-like process began. Oschadbank's position was as follows: to prevent a repetition of the situation when they stopped paying citizens' deposits in the USSR Savings Bank. We remembered that this fact caused the greatest damage to our reputation. Any negative would have a synergistic effect. Dissatisfaction would rise from the very soul of our investors. Here, again. In addition, Oschadbank has the status of a state bank. Therefore, a decision was made: to pay everything and collect exactly as much cash as necessary at ATMs. It was impossible to stop the process, otherwise the excitement and nervousness would have increased. We need to take into account the specifics of our clientele. If rather wealthy people fled to Privatbank, Aval, or Pravexbank for their money, then pensioners who objectively felt the fear of losing their belongings again came to us. Subsequently, some of them even began to return money on deposits. Retirees were aware of the state guarantee and saw that the bank made payments without too much fanfare. A conversion deposit was invented specifically for them. In order to avoid exchange rate risk, we offered to convert the hryvnia into foreign currency on the spot and leave the money in the bank. Oschadbank was in an atypical situation, as it had a non-standard liability structure. Unlike other institutions, we did not have liquidity problems. First, Oschadbank had and still has a significant secondary reserve of liquid assets, domestic government bonds. We could at any time convert them into liquid assets through NBU refinancing. Our colleagues were forced to receive stabilization loans against loan portfolios, an inconvenient and cumbersome tool that involves very complex verification procedures by the National Bank employees. This delayed the process of getting them money. Without boasting, I can say that we did not apply for a stabilization loan. The only thing we asked the National Bank was to redeem the certificates of deposit ahead of schedule, which we bought earlier due to excess liquidity. Secondly, more than 75% of household deposits in Oschadbank are on demand, while all other banks have this share of term deposits. Non-standard proportion for legal entities. In the entire banking system, term deposits of companies amount to about 40%, in our case, 60%. In times of crisis, these ratios worked for us. Thirdly, Oschadbank has a very large amount of formed cash. At that time, we further increased the limits of the cash desk and tried to satisfy everyone. We paid pensions, compensation for depreciated deposits in the Sberbank of the USSR, paid wages and returned deposits. Of course, in order not to provoke a massive outflow of funds, even before the entry into force of Decree No. 576, we gave the order to slow down the process of early payment of deposits by all possible means. For example, to draw up additional documents, to order money for a long time. At the same time, we still increased the cash register limits. There was a normal management process that allowed Oschadbank to get out of this situation with dignity. We held weekly conference calls with the heads of regional departments and managed liquidity in a manual mode. Every day they reduced the payment calendar in the context of the regions and demanded that the heads of territorial departments form and coordinate their payment calendars with the board. Oschadbank is a systemic bank. We operate in all parts of the country. It was interesting to see how our colleagues polarized due to political events. Those or other remarks addressed to the eastern regions, Kharkov, Donetsk, Luhansk, people perceived with resentment. There was a heightened sense of justice. Someone believed that Kiev was biased in interpreting the region's problem. Suddenly they began to be offended that they were being spoken to in Ukrainian, although they had not paid attention to this before. We had to look for a delicate balance, because we understood that the political situation could not but affect the team. The National Bank regularly invited the heads of the largest institutions for consultations. At the end of November, a meeting was convened to discuss the future Decree No. 576. Boris Timonkin, Alexander Dubilat, Igor Gelenko, Alexander Shlapak, Arseniy Yatsenyuk, Sergei Mishta, Igor Franskevich sat at the same table. On behalf of other banks, representatives of AUB were present, Alexander Sugonyako or Antonina Palamarchik. Nikolai Sugonyako attended some meetings from Oschadbank, but then I attended them as acting chairman of the board. It so happened that Arseniy Yatsenyuk removed Nikolai Sugonyako from his duties as head of Oschadbank. There was no need for secrecy. There was nothing supernatural in the fact that the leaders of the top 10 banks are going to discuss the difficult financial situation. Moreover, politicians have spoken about it on television. Everyone came in his car, went into the building. All those gathered were in a very tough competition, regularly colliding in the same market segments. However, the fear of losing one's business unites. At the same time, everyone became aware of the possible negative consequences. Everyone understood that systemic banks would suffer more than others. They resemble a sieve, many points through which the outflow of deposits occurs. The biggest plus in that situation played against us. It was impossible to block all channels in an instant. If the issue with ATMs was solved relatively easily, then closing the branch network meant provoking even more tension. I understand very well Alexander Durkak, chairman of the board of Aval Bank, who said that he was losing 100 to 200 million hryvnias every day. This is a disaster for me, he said. An action plan was developed. It included a PR campaign, preparation of an anti-crisis resolution, issues of maintaining liquidity and issuing stabilization loans. Everything was discussed as a whole, because separate measures would not have given the desired effect. To solve a problem, you need to acknowledge its existence. That was done. The issue was discussed not with each individual, but under the auspices of the National Bank in Arseniy Yatsenyuk's office. It doesn't matter who proposed which paragraph of Decree number 576. It was a collective authorship. The most important advantage of the NBU is that it did not try to correct the situation on its own. The uniqueness of the situation was also in the absence of officialdom. There was a normal male conversation. It looked like this: they took off their jackets and, not embarrassed in expressions, proved something to each other. In a simple, intelligible language without cuts. Boris Timunkin took a very correct and constructive position. He clearly and unequivocally formulated the problems that arose. They talked about the fact that risk management in banks is imperfect and does not withstand stress in a systemic crisis. They recalled that the legislation was ineffective and changes were needed to the civil code in order to limit the early withdrawal of deposits. The bankers offered to lobby these changes as much as possible. Everyone had their own people's deputy, who could submit the necessary bill for discussion. A combination of factors worked: the fear of commercial banks for the fate of institutions, the will and ability of the National Bank to make non-standard decisions, creativity and the ability to unite in order to achieve the goal. You need to understand that all bank managers are talented people. The National Bank managed, without hurting ambitions, to take the most important thing from each participant in the process and create Resolution number 576. The crisis made it possible for people like Arseniy Yatsenyuk to emerge. Somehow in those days, he and I left the building of the National Bank and went down to the Maidan. On the way, people shouted to him, "Arseniy, keep the hryvnia." That is, Yatsenyuk was identified as a person who influences the process, and not just states the problem. Publicity, openness, a young face with a healthy blush, the absence of panic and shaking hands, accessibility, altogether gave their effect. He contrasted with the general situation, spoke very confidently. People shook hands with Arseniy, they wanted to take a picture with him. He was perceived as a person who is really capable of influencing the situation. We understood that the document from a legal point of view could not withstand criticism. Therefore, Igor Gelenko, at the request of the NBU, obtained a court decision, in which something like the following was written: the National Bank is ordered to enact a decree that limits the right of an individual to early withdrawal of a deposit. There were lawyers who tried to torpedo the ruling. They sought conclusions on violation of the law, but everyone clearly understood that the winners are not judged. A PR campaign strategy was developed. Private consulting was chosen as the manager of the money. Alexander Dubilet was the project manager. The chairman of the boards of banks appeared on TV screens and said how wonderful everything was. The leaders of the NBU, Privatbank, Ukrstsbank, Ukregzimbank and Oschadbank spoke most often. In addition to the public part, there were also internal mechanisms aimed at the implementation of Decree number 576. They could not be voiced by definition. For example, there was an instruction to check all foreign economic contracts that provided for payments abroad. We have established internal mechanisms by which part of the contracts for the withdrawal of money abroad was screened out even before they were analyzed by the National Bank. A gentleman's agreement was reached between the banks, a kind of competitive truce. It was an agreement in principle, and it was respected, although not by everyone and not always. For example, Decree number 576 ordered payments to be made with a one-day deferral. On this occasion, mutual accusations were heard at the following meetings. For example, Igor Franskevich had claims against Alexander Dubilet for the fact that Privatbank made payments on the same day. Similar accusations were made by Aval. There was also a certain slyness in our position. It consisted in the fact that we paid money to citizens who made a big scandal. It was an unspoken rule. As a standard, there was no early issuance of the deposit, but if the depositor began to disturb the bank staff and customers, the branch manager had the right to invite the brawler to his office and satisfy his demands. However, there were few such cases. I remember this episode the most. One evening I talked with Arseniy Yatsenyuk and told him about the current situation. As a result, a wonderful idea arose, to use politics so that the money does not leave, but returns to the banks. As a joke, I proposed to introduce the orange deposit with a maturity date until the complete victory of the revolution. In the course of the conversation, the idea also arose to introduce a white-blue contribution in order to fully exploit the polarization already. At the same time, the dynamics of the balances on these deposits should be made available to the public, to show, for example, that the balances in Oschad Bank increased by so much in the orange deposit and so much in the white-blue deposit. There was even an idea to show this ratio on the big screen on Maidan Nezalezhnosti. Any hesitation would be perceived as a kind of loss, and in that and in the other camp there were quite wealthy people who would want to change the balance in their favor. And this is in our favor. If you want a political confrontation, let's direct it in a constructive direction. In the development of the idea arose to issue a payment card with the appropriate symbols for each deposit account. For example, to that and so. And to issue them only if the depositor has at least 1,000 hryvnias on his account. The first cards of both issues were to be presented to party leaders. There was even an idea to give Viktor Andreevich a white and blue card, and Viktor Fedorovich an orange card. This would be a consolidating moment. It must be said that only a state-owned bank could implement such a program, given the state guarantee and neutrality. We wrote letters to the headquarters, but the idea was not supported, and the crisis gradually began to fade. It is a pity that the project could not be realized. I think it would be a bright episode in the struggle for the stability of the financial system. It would be nice for everyone to open their purse now and see an orange or white and blue card. I talked with colleagues, and they said that even for the story they would put money on deposit. Roman Zhukovsky, in the fall of 2004, deputy manager of the Kiev regional branch of Yukasets Bank. The experience of autumn 2004 is relevant even today. The parliament is considering a bill, according to which the National Bank can get the right to impose a moratorium on the payment of deposits. In particular, this can happen if more than 5% of deposits are withdrawn from banks during the week. The proposal has many opponents. I personally spoke with officials who believe that 5% is nonsense. Such statements sound, of course, from a misunderstanding of the essence of the issue. In the fall of 2004, almost 10% of deposits were withdrawn in one of the branches of Yukasets Bank in 3 days. There was a real problem with making payments. Of course, it was not yet so acute as not to transfer money at all, but regulation was already carried out in a manual mode. We told who we would pay in the first place, and who, with a delay. And if the National Bank had not stopped the process of outflow of deposits, a collapse would have come very soon. People were taking their money out so fast that we couldn't stop the flow. Some things are perceived with humor now, but then they did not seem funny at all. And no one can be blamed for this, because everyone acted on the basis of the information he had. Bank branches, for example, began to impose restrictions on the issuance of money and the sale of cash currency. Some did not return deposits at all, except in especially critical cases, while others were guided by strict limits. For example, even before Decree No. 576 came into force, the board of Yukasets Bank approved that no more than $1,000 can be sold in one hand. In the Kiev region, this amount was $1,500. For some time, we offered to sell dollars without restrictions, if the client converted his hryvnia deposit into currency and put it on the deposit. It was one way to stop the leakage of deposits. However, it soon stopped working. At the end of November, the bank lived for 2 days without a decision, not issuing deposits. On the first day, we were sure that we would be beaten, and we discussed very seriously that we could leave the cars at home the next day. They could simply be burned. Additional police squads were called to the bank to protect the vault. Now it is difficult to convey that intensity. We were preparing to storm the bank. Investors showed outright aggression. Everything that was said earlier about trust in the banking system, about its development in comparison with the rest of the economy, was forgotten in one moment. It became especially difficult in the last days of November, when we suspended the issuance of deposits. People had psychological breakdowns. A grandmother came and said that she had a metal plate in her head that needed to be replaced urgently, otherwise she would open her skull right now and put her brain on our table. At that moment, the practice of selling certificates from an oncological dispensary became widespread. This institution issued a certificate for $50 that the client had terminal cancer and urgently needed funds for chemotherapy. I think that the statistics on cancer patients in the fall of 2004 deteriorated sharply. In one of our branches, there was a case when grandfather came to the bank and asked to give him a deposit. It turned out that he had saved money all his life and put it in Yukasat's bank only because he considered it to be state-owned. Then he heard from someone that deposits were not being given out and came to the bank to check. Rumors have been confirmed. Then he asked to speak with the manager. As soon as grandfather entered the office, he immediately doused himself with gasoline, took a lighter and declared that if he was not given the deposit, he would burn himself in front of the manager. Of course, they gave him the money, but at the moment when he received it, he had a heart attack. Grandfather was taken away by an ambulance. Top managers of the branch tried not to leave their offices. The reception areas were completely filled with people. They were launched one at a time, otherwise it was impossible to withstand the tension. There is no need to talk about the impressions of employees who directly communicated with people. Life from the office window looked much more peaceful. Not only that, they heard a lot about themselves. In front of their eyes, grandfathers walked around the department and beat on the windows with sticks. All this was accompanied by shouts, "Thieves! Bandits!" The glasses did not break only because a protective film was glued on top of them. There was a problem with the police. Despite the strengthening of the outfits, both they and we had one attitude: in no case increase the confrontation. They would intervene only in the event of a direct attack on the bank. And even then, if a real assault on the building had begun, these four people would not have played a special role. I doubt they would shoot people. Thus, the police simply created the illusion of strength. When we learned that the National Bank by a decree prohibited early issuance of deposits, we were ready to open champagne. It was real fun. The situation was discharged instantly, in 2 or 3 days. We could already explain to people that there is a decree, its appearance is caused by obvious factors, and as soon as the situation is resolved, payments will immediately resume. Before that, there was basically nothing to say. There were no queues because no one was given anything. The money was paid only for the funeral, as well as in the event of an urgent operation. Any documents that people submitted were checked by our security service. Only after its conclusion did we make a decision. For a while, people walked around the floors, sat in the reception area, and talked with employees. There were many of them in the first days after the adoption of Resolution No. 576, but mass hysteria was no longer observed. People asked for money, we justifiably refused them. Of course, the depositors were unhappy, but it was felt that the tension was subsiding. Either the National Bank had a high authority among the population, or the universal law worked. It says that every phenomenon has its own stages of life. At the same time, there are points of no return. If at a certain moment they didn't go for an assault, they won't go. Resolution No. 576 was best perceived by the banks themselves, since the document was aimed at their protection. They themselves tried to comply with the rules established by the regulator. The example with the sale of cash dollars not more than 1,000 in one hand was indicative. Each top manager of the bank has 5 to 10 clients who are considered his own and for whom you want to do everything as best as possible. However, even they had to refuse to convert large amounts. If each of the top managers did a favor for their best clients, the situation would get out of hand. Of course, they were offended, but we survived the crisis. Jeffrey R. Franks, former IMF senior resident representative in Ukraine. Background. At the beginning of 2004, Ukraine experienced an economic recovery. After the catastrophic drop in the level of GDP in the 1990s, the financial crisis and hyperinflation in 2000, the growth of the Ukrainian economy still managed to be restored. By the end of 2003, its level was 10%. As a further guarantee of economic stability, the government of Viktor Yanukovych held talks with IMF experts on the conclusion of a preemptive standby agreement for a period of 12 months. This program, approved in March 2004, was created to ensure sound macroeconomic policies, encourage structural reforms, and maintain a stable level of development. Another impetus for the IMF's agreement was probably Ukraine's desire to secure some outside support in managing the economy in the pre-election year. Otherwise, robust growth in early 2004 masked the fragility of the recovery process, leaving the economy vulnerable to negative shocks. Central bank reserves, the framework for supporting the exchange rate and the banking system as a whole, rose from $1 billion in 1998 to 1999 during the financial crisis to over $6 billion by the end of 2003. However, these figures were still low relative to world standards for a country with a fixed exchange rate regime, subject to volatility in the economic and political environment. Although the banking system was restored after the financial crisis, the level of public confidence in banks remained very weak. The growth of the economy depended on the export of several key sectors: steel, chemical products, and grain, which led to a sharp jump in inflation. Probably the weakest side of the Ukrainian economy in 2004 was the political situation in the country. Coming to the end of his second five-year term as president, Leonid Kuchma was deeply unpopular with the population, much of which was disillusioned with the autocracy and corruption that prevailed in the public sector. In October 2004, in the midst of the first round of presidential elections, pro-government political forces were concentrated around Prime Minister Viktor Yanukovych, while the opposition united around former Prime Minister and former head of the National Bank of Ukraine Viktor Yushchenko. By the middle of the year, the political campaign had become fierce and tense. In such a political situation, the proactive standby program was doomed. In July, after an IMF audit, it became clear that the project had deviated from the intended course. Due to political fragmentation in Parliament and falling budget revenues, it has proved impossible to implement some of the structural reforms promised in the treaty. However, the IMF did not eliminate the program, but only suspended it. The September events further exacerbated the situation. Opposition leader Viktor Yushchenko was the victim of deadly dioxin poisoning, raising fears about the use of criminal manipulation during the election race. Prime Minister Viktor Yanukovych unexpectedly announced a significant increase in pensions through payments from the budget. This decision, apparently made without consulting even the top government economists, caused the almost balanced budget of the first 8 months to fall to 4% of the budget deficit of GDP by the end of the year. Economic leadership was also weakened. The head of the NBU, Serhiy Tijipko, has gone on vacation to head the presidential campaign of Prime Minister Viktor Yanukovych. Tijipko assigned his duties to his first deputy, young Arseniy Yatsenyuk. The Prime Minister himself was also absorbed in the election race. On October 31, according to the official results of the first round, Viktor Yushchenko won by a narrow margin. Since none of the candidates won an absolute majority, the second round of elections took place on the 21st of November. According to the official results, it was won by Viktor Yanukovych. However, statements about large-scale falsifications appeared, confirmed by the results of exit polls, which unanimously predicted a convincing victory for Viktor Yushchenko. This sparked massive protests that escalated into the Orange Revolution. It resulted in re-elections, this time Viktor Yushchenko won. On January 21, 2005, he assumed his presidential duties, beginning of the financial crisis. Bearing in mind that optimistic headlines in the economic news masked serious flaws, IMF experts, NBU officials, and government technicians carefully followed the events of the fall of 2004. The first signs of the crisis appeared in central bank reserves and in foreign exchange markets. During the first 8 months of 2004, the value of gross reserves almost doubled. However, starting from September 13, it began to fall rapidly. By the end of September, this figure fell by $250 million. The difference between the official NBU exchange rate and the actual rate at which the dollar was accepted in the private sector increased, thereby reflecting increased demand for dollars in the form of insurance against economic and political risks. With the approach of the first round of elections, the outflow of funds from the gold and foreign exchange reserves increased. In 1 month, the NBU lost $1.48 billion, which amounted to almost 12% of the total reserves. As the central bank sold dollars rapidly to support the exchange rate, reserves were depleted by an average of $73 million a day. While the exchange rate did not change significantly, the deviation between the commercial markets and the official rate continued to widen. It seemed that the first round of elections temporarily eased the pressure on the economy. With little intervention by the central bank in the foreign exchange market during the first 3 weeks of November, reserves were depleted by only $212 million, or $12 million a day. The height of the crisis. The reaction of the authorities. After the second round of elections, the political crisis came to a head, exacerbating financial difficulties. Over the last 10 days of November, the NBU's reserves fell by more than $500 million, or $90 million a day. The worst thing for the banking system was the outflow of deposits. At first, he came from the public sector, financing the growing budget deficit and thereby draining these deposits. Soon, private holdings in hryvnia also began to decline, reflecting waning public confidence in the regulator's ability to hold the exchange rate. Dollar deposits continued to rise, suggesting a possible confidence in the banking system, at least in this sector. In late November and early December, the streets of Kiev, filled with orange protesters, increased fears about the state of the economy. On November 29 to 30, the loss of the national bank's reserves exceeded $200 million a day, and the total loss since September amounted to $2.5 billion, or more than 20%. On December 3, Ukraine's Supreme Court ordered the Central Electoral Commission to hold a runoff election, but the economic crisis continued. In the first half of December, reserves fell by another $600 million. The outflow of deposits also increased. By the middle of the month, about 7 billion hryvnia on deposits in local currency were lost, which amounted to 12% of net hryvnia deposits. The massive withdrawal of deposits has led to a serious shortage of liquidity in many banks. Several officials, including President Leonid Kuchma, exaggerated further, arguing that the Orange Revolution led to a crisis in the banking system and jeopardized the exchange rate. In such difficult conditions, the NBU took emergency measures to combat the lack of liquidity. To slow down the crisis in the banking system, he introduced a number of restrictions on the withdrawal of deposits by the population. The regulator also provided funding to banks that were experiencing a shortage of cash. Although the IMF representatives favored a more flexible exchange rate, they agreed with Arseniy Yatsenyuk's argument that free float during a crisis would only increase panic and supported the decision to continue using reserves to protect the exchange rate. However, planning has begun in case the rate needs to be broken if reserves fall too low. To reassure the public, Arseniy Yatsenyuk took an active public position, while the deputy head of the NBU Alexander Shlapak worked directly with banks. Fortunately, the measures taken by the National Bank improved the situation. The population was dissatisfied with the ban on deposits, but as the market normalized, the intensity of the protests fell. On December 16, the NBU's reserves reached the lowest level since the beginning of the crisis, $3.1 billion. The outflow of deposits peaked on December 17, after which the banking system began to recover. By December 26, the date of the third round of elections, reserves were replenished by $200 million, and bank deposits increased by $450 million. Along with the undeniable victory of Viktor Yushchenko and the warming of the political atmosphere in the country, the situation on the financial markets has also improved. By February 1, shortly after the inauguration, the banking system managed to recover all the losses in deposits. Although by mid-April 2005 the central bank's reserves had not been fully restored to their previous level, a progressive steady growth began from the end of December. Conclusion. The financial problems of 2004 were caused by the main political test for the young Ukrainian democracy. Fundamental economic indicators remained healthy, but the country was still vulnerable, as the population had little confidence in the ability of the authorities to effectively manage the economy. In particular, this was due to memories of the difficult economic situation that the country was going through in the 1990s. People's fears may have been exacerbated by the authorities' failure to comply with the IMF's predictive standby requirements, the sharp increase in pension spending, and inflammatory comments by some politicians about the manual management of the Orange Revolution. In addition, the rigidity of the exchange rate has increased the number of difficulties facing the NBU, since the precautionary measures in the form of a free exchange rate of the hryvnia against the dollar were not available. Despite the precariousness of this policy, the precise and effective measures taken by the National Bank successfully averted a larger crisis. Not a single institution went bankrupt, and the run on deposits quickly stopped. Despite the fact that access to deposits was temporarily limited, depositors did not lose their money. A forced devaluation was avoided. In the end, after the political situation was cleared up, economic indicators returned to normal very quickly, providing a continuous economic recovery. Despite political uncertainty, the long period of economic stability since 2004 was the result of a successful fight against the crisis. The faith of the population in the ability of the financial system to withstand political storms and the ability of the authorities to manage it has greatly increased. During the chaotic start of the 2006 parliamentary elections, there was a much larger outflow of reserves, but it did not lead to a reduction in the deposits of the banking system, although their growth did decrease. After the elections, the reserves were quickly replenished, although bickering continued in the government over the formation of a new government. The political confrontation in 2007, when street demonstrations broke out and there was a heated debate over the decree of President Viktor Yushchenko to dissolve parliament, did not cause any significant impact on reserves, the banking system, or economic growth. Although the Ukrainian economy has become more resilient to constant political upheavals, it is still vulnerable to future financial shocks. Political problems have greatly slowed reforms, leaving the country with an economic and legal infrastructure only partially adapted to the requirements of a fully market economy. If transformations are not renewed, the country's ability to withstand future turbulence is in doubt. Moreover, continued dependence on a fixed exchange rate paralyzes the ability to respond to new crises and can eventually become a source of instability. In this regard, a prudent monetary policy with a flexible exchange rate, a low budget deficit, and flexible policies regarding product, capital, and labor markets are needed. Yuri Yakusha, Deputy Executive Director of the IMF for a group of countries led by the Netherlands and Ukraine. The crisis that wasn't. It is difficult for me to assess the events that took place in Kiev in October-December 2004. In addition, the staff of the UN system should not comment on such situations. However, the idea of analyzing the recent successful experience of overcoming the financial crisis is useful. At that time I was working in Washington on the board of directors of the International Monetary Fund. The IMF provided the specialists of the National Bank of Ukraine with the methodology of stress testing of banking systems. It was supposed to help answer the question of what phenomenon the country faced, a liquidity crisis or a problem of currency solvency. The difference between these concepts is very subtle, but important. Overcoming the crisis of solvency or confidence in the currency with additional liquidity is like putting out a fire with gasoline. There will be no benefit. Unfortunately, at that time it was not possible to convince specialists who were not responsible for cooperation with Ukraine, but who knew the appropriate methodology, to do it promptly, over the weekend. As it turned out, the NBU correctly assessed the situation in those critical days, using mainly its own methods. As far as I remember phone conversations of that time, including between Arseniy Yatsenyuk and Michael Depeler, director of the IMF's European Department, the fund did not really understand what was happening in Ukraine, and provided advice that, oddly enough, was more radical than the actions successfully introduced by the National Bank. In April 2005, I was in Odessa with a group of IMF executive directors from France, the UK, Italy, and Holland. We saw with our own eyes ordinary citizens who simply approached Arseniy Yatsenyuk, then the deputy head of the regional government, on the street and thanked him for saving their savings by the National Bank during the political crisis. For foreign guests, this was a more powerful symbol of a successful exit from a difficult situation than even statistics on the return of the banking system to normal development. In terms of the economic history of modern bank finance, Ukraine fared better in 2004 than many developed countries did in 2007, as separating liquidity risks from insolvency risks during the 2007 credit crunch is difficult. What are the prerequisites for Ukrainian success? I see several factors. First, the NBU knew what was really going on in the banking system, since at that time there was already a system for monitoring the liquidity of the banking system in real time. That is, what was unknown to the IMF or other outside observers was not a secret for the regulator. The banking system had no problems with currency solvency. Second, in the years prior to the political crisis of 2004, performance discipline has significantly increased in terms of compliance with various standards and reserve requirements. The share of bad loans decreased, while the volume of long-term investments increased. This was noted by all independent analysts. This was discussed in the studies of the financial sector of Ukraine, conducted by the Fund and the World Bank. Moreover, my demands to compare the statistics of Ukraine's doubtful loans with other states that had better indicators on paper led the IMF specialists to admit that such a comparison was impossible. It turned out that in Ukraine there were more stringent requirements for the classification of loans than in other countries. In the event of a threat of a crisis, an unpleasant truth would be much more useful than a pleasant self-deception. Third, after the monetary and financial crisis of 1998 to 1999 and before the beginning of the aggravation of the election campaign in the second half of 2004, the Ukrainian leadership tried to weaken the dependence of the country's financial system on external factors, and was also extremely cautious about some non-transparent financial instruments and about increasing debts in general. Political instability also helped, from time to time. Leading Western newspapers printed reports on political protests in Ukraine, scaring off not only foreign investors, but also slowing down the movement of potentially dangerous speculative capital. Fourth, the National Bank accumulated significant, relatively short-term foreign exchange debt, foreign exchange reserves, and the fiscal policy during 1999 to 2003 was extremely cautious and sometimes even conservative in terms of borrowing policy. In the months leading up to the political crisis, the NBU introduced new heightened bank capital adequacy ratios, an unpopular measure that reduced banks' profits but strengthened the institutions themselves. External conjuncture and terms of trade also remained favorable for Ukraine. Thus, there was no external impetus to turn the crisis of mutual confidence of banks into a currency crisis under such conditions, in contrast to 1998, when non-residents left the market, pushing domestic capital to flee as well. Fifth, the banking system of Ukraine was one of the first in the post-Soviet space that began to apply modern accounting standards. This made it possible to systematically conduct external independent audits of systemic banks, so their owners and shareholders had no reason to panic due to distrust of information about the state of the system. Ukraine was also the first among the CIS countries to switch to advanced statistical standards for the provision of macroeconomic information, the so-called Special Standard for the Dissemination of Statistical Data by the IMF, developed for developed countries. Accordingly, the outside world and domestic investors directly from the websites of the State Statistics Committee and the NBU received a prompt and understandable picture of the Ukrainian macroeconomics, which could be easily compared with data from other countries. Finally, at that time, the Association of Ukrainian Banks accumulated considerable experience in order to become a participant in the dialogue with the supervisory system and the regulator, facilitating communications between institutions as well as between banks and the NBU. The media, especially television, provided the National Bank with a good platform for communicating with the population and small businesses. However, according to my observations, journalists did not always professionally cover the course of the financial crisis. At the same time, there were institutional factors that made it difficult to overcome it. In particular, we are talking about insufficient legal regulation of many issues, for example, the powers of the NBU and government agencies in case of financial volatility. International practice shows that the expansion of the powers of departments during crises should be spelled out in detail by laws and bylaws. International practice allows the central bank or government bodies not only to impose temporary restrictions, but also to administratively transfer deposits from one financial institution to another, provide targeted liquidity support under certain strict rules to make it impossible to abuse trust, and also take other temporary measures to avoid systemic threats. The low overall stability and predictability of politics in Ukraine should encourage the legislator to improve the regulatory framework. Unfortunately, the modernization of legislation has been too slow. Frankly speaking, in such conditions, not only professional awareness and determination were needed, but also the courage to make decisions in the gray legal space. Arseniy Yatsenyuk. Date and place of birth, the 22nd of May 1974, Chernivtsi, Ukraine. Higher education. Graduated from Chernivtsi State University, Faculty of Law, Jurisprudence, 1996, Chernivtsi Trade and Economic Institute of Kiev Trade and Economic University, Accounting and Audit, 2001, 12.1992 to 9.1997, President of the law firm, Urek Ltd., Chernivtsi, 1.1998 to 12.1998, Consultant of the Credit Department of the Joint Stock Postal Pension Bank, Aval, Kiev, 12.1998 to 8.2001, Advisor to the Chairman of the Board of the Joint Stock Post Pension Bank, Aval, Kiev, 8.2001 to 9.2001, Deputy Chairman of the Board of the Joint Stock Post Pension Bank, Aval, Kiev, 9.2001 to 11.2001, Acting Minister of Economy of the Autonomous Republic of Crimea, Simferopol, 11.2001 to 1.2003, Minister of Economy of the Autonomous Republic of Crimea, Simferopol, 1.2003 to 2.2005, First Deputy Head of the National Bank of Ukraine, Acting Heads of the NBU. The 3rd of September 2005, 9.2005, First Deputy Head of the Odessa Regional State Administration. The 27th of September 2005 to the 8th of April 2006, Minister of Economy of Ukraine. Since the 20th of September 2006, First Deputy Head of the Secretariat of the President of Ukraine, Representative of the President of Ukraine in the Cabinet of Ministers of Ukraine, authorized by the President of Ukraine for control over the activities of the Security Service of Ukraine, member of the NBU Council. The 21st of March 2007 to the 12th of April 2007, Minister of Foreign Affairs of Ukraine, member of the National Security and Defense Council. The 12th of April 2007, Head of the Verkhovna Rada of Ukraine. Awarded the Order of Yaroslav the Wise, 5th class. Candidate of Economic Sciences. Wife, Teresia Viktorova. Children, Christina, Sophia. Application. Table of Financial Monitoring of the IMF, peak period of the crisis from the 1st of October 2004 to the 1st of January 2005. Photographic materials. Demonstrators near the walls of the National Bank during the decisive days of the Orange Revolution in December 2004. Photo by Delavaya Stolitsa. My main support in the board of the NBU was Alexander Shlapak, whose wisdom and balance sometimes kept me from making too radical decisions. Photo by Nikolai Lazarenko. Thank you for downloading the book from the royalib.com free e-library, http://royalib.com. Leave a review about the book, http://royalib.com/Yatsenyuk_Arseniy_Vmen_Orange_VOI_REVLYATSDU.html. All books by the author, http://royalib.com/author/Yatsenyuk_Arseniy.html.